One of the things people say when they start learning Fibonacci Trader is that it seems to be difficult. There's a learning curve involved. So we're going to do something a little different at this workshop. We've got a guy that's an expert with Fibonacci Trader, and we're going to take whatever time it takes today. The only thing we have to be cognizant of is that we have to be here at 7 o'clock tonight for Tim. So we can go as long as people have questions. Isn't that right, Perry? And if we have more questions, we'll stay after Tim finishes tonight. Perry Matich started trading in the early 80s prior to the PC. And he, at that time, was hand charting his charts to get a head start on those printed charts that you would get in the mail once a week at that time. He's been doing technical analysis since the very early part of his career when he was an analyst for a momentum stock newsletter in the 80s. And he's been a part of many beta test programs for trading software with various companies. Much of his time has been spent researching, creating, and testing indicators and mechanical systems for trading. Perry has provided technical support for Fibonacci Trader software when Carlos wasn't available, and is now a trainer with the Fibonacci Trader training service. Perry's going to go through and discuss how he uses Fibonacci Trader, the features of it, and make sure everybody's up to speed. If anyone has some questions like we had this morning, we'll make sure we get the knowledge to go through and get those things set up. Do we have any questions before we get started? We're going to be taking some regular breaks, but this will be a long afternoon. Okay, let's go ahead and welcome Perry Matich. Yeah. You can stick that in your pocket or put it on your belt, whatever you want there.
I'm all set. Can you hear me? Hello, hello. Hi, everybody. Oh boy. I don't know how to use it anyway. Okay. There are just a few things I want to get started with, and I hate when I come to these things and people tell you, don't ask me any questions, but don't ask me any questions. Seriously, if you got a question, I've got a lot of things that I would like to go through. I believe I have ample time here this time around to go through everything I want to hit on. I'm not an expert on the program. I don't think there is such a thing. There's so much to this program that I don't think anybody in the world knows, not even Carlos. So anyway, I do use the program regularly, and I hope to take you through a logical progression of how to set it up from the very beginners, of those of you who are beginners here, to basically using the program in a functional manner to help you use the program to help you make money. Anyway, seriously about the questions. Try to hold your questions, write them down. We will have plenty of time. I will be here the entire 4 or 5 days, so you should have plenty of time to get a hold of me or track me down to answer any questions that I may not cover for you here today up front. But try to hold your questions to a minimum, and I will take some regular breaks, because if you look at your schedule, it pretty much has me talking the entire afternoon. I could probably do that, but I won't. So anyway, unlike some of the other unlike all of the other presenters, I am not going to speak of any in particular trading techniques or styles. I'm not here to teach you how to trade. I am simply here to teach you how to use the program only. So keep that in mind. So any particular setups and things that you may have, if it's appropriate, we may discuss them. But my whole emphasis here is to actually teach you how to use the program and to make better use of the program. So for about the first 45 minutes to an hour, I plan on going over the very basics of it, from program setup to the point where you can get charts and indicators on the screen. So for all of you beginners, this is your time, so stay awake. And if you're sitting next to somebody that's a beginner and they start nodding off, punch them or something. Wake them up. Wake them up. Uh-oh. Okay. All right. Well, with that, let's get into it. And I guess I will basically, well, not I guess, I will be following the format in your books. I wrote that up, and I really wanted to do a bigger font for this show here. Unfortunately, I was gone for a month traveling and enjoying myself, and didn't really have enough time to get that to Linda in time to get to the printers. So it's readable for you. It's just written in a regular, whatever, 8 or 12 font, whatever it is. But I will follow through the material on the book, in the book. So you can follow along with me, but since a lot of my issues and program, well, what I'm doing up here is teaching you how to use the program, I'm going to sit down here at the seat, and hopefully that won't be a problem for most of you, because I'm going to be doing things live on the screen for you. So hopefully that's okay. So let's get started. So first thing, you get the program. We're going to take this from the very beginning. You just got the program loaded. You just installed the software. And you know, I want to say one thing. I almost forgot. I want to say 2 other things before I get started. You know, I've been doing this for a long time. I opened up my first account in, I think it was 1980, and I knew nothing. I rarely knew how to spell the word stock, and I knew nothing about anything, and I started going to a lot of little freebie things in the LA area. I lived in Southern California for most of my life, and I'm in Atlanta now. But anyway, I'll tell you that sad tale some other day. I started going to these things, and there was a group called TAG, and right up front here you've got your Honorable John Hay, who I'm honored because 20 years or so ago I listened to John up in front of the room telling me how to do things, and now here he is in the audience. So I'm not sure what all this means, but John, thanks for being here. And the other thing, Dennis actually hit on it this morning. I did trade, and John and I were actually talking at lunch about this, and there's been so many times when I've been cleaning my desk out and I took my old hand-drawn charts and I started throwing them away, and I just, you know, I have so many hours into those things, and they are just sentimental, I guess, to me. I just put them right back in the drawer because I don't have the heart to throw those things away, but I wish I'd have brought them so you could see them stretched out across the room. But, you know, what Dennis was talking about earlier this morning, there is a ton of validity to. Back in the days when I did that, and somebody asked me, well, gee, what did the market do today? You know, and I actually drew that line with my hand, and you know, I knew the values, knew the high, the low, the close. You know, I knew it. If somebody asked me that night, gee, where did the Dow close, or where was the S&P, or what did it do today? I could tell them. Today, somebody asked me, it's like, yeah, I don't know. I think the S&P went up today. And then, you know, I've actually found a few times when it went down that day. But, you know, there really is something to be said for doing things by hand. And as Dennis was to some degree preaching about printing your charts out, marking them up, when it's all on the computer, you know, it's a tool. I completely agree with that. All of these software programs are a tool. They're great tools, but you got to remember they are tools. They are not the end all to, you know, they're not the final answer. So you really do have to use a little bit of brain power here and there. And anyway, with that said, let's get started. So, okay, you've just got your program loaded. The very first thing you're going to need to do, and again, on installation of this program, if you followed the installation correctly, it should have asked you a number of these questions. But it's going to set up the data vendor. So to set up a data vendor, if some other time you change vendors or something, you go here to Utilities up at the top, and you go down here to Data Source and select Real-Time Data Vendor. And this will bring up this dialog box. This dialog box should be relatively self-explanatory. There's really not much to it. You simply pick the data vendor of your choice that you're using. These are all the data vendors that the program uses, with one minor exception. And I'll get into that in a minute. So really, you do nothing more than check Interactive Brokers or DTN or eSignal or QuoteCom, S&P Comstock, whatever you want to do. If you have any issues, you can hit this Help button right here, and that will take you directly to the web page, which will give you further information on this page, as well as it will give you down at the bottom, and am I hooked up? I didn't hook up. It's okay. If you go down to the bottom of this page, for those of you, I know FX is the big rage these days, and everybody wants to trade Forex. Many of the Forex dealers don't really provide open, high, low, and close. They're operating off the last. So up at the top, you see DDE and DDE2 server. So you may have to check one of these boxes, and you'll see several other boxes come up down here. And the information that you will have to use, depending on your vendor that you have selected, will be right here under this help button. Just select that help button, go to that page, and let me tell you what, let me hook up. We can go there. It'll give you all the good stuff you need to know. Let's see how quick this is. Oh, and this is a firewall, you won't see this. Let's see, keep it internet. Okay, let's try that one more time. There we go. Okay, so if you just scroll down to the bottom of this page, it will also, as you can see, gives you the different vendors here and gives you some information that you may need or want to know. But if you go all the way down here to the bottom, you can see here where it says DDE server or DDE2 server. Click here, and now here's your various DDE type servers and any additional information you may need with these other data sources. I don't know how many of you are familiar with data programs and vendors, but I don't think you're going to find another program on the market that works with more data vendors than FibTrader, which is another reason I like it so much. You have quite a bit of versatility. Okay, all right. So, next. All right. Now that you've got your data vendor set up, you can see that I have none. I'll make another note here. People often ask, can you work with two different data vendors at the same time? The answer is no. You cannot. You select one or the other. If you have a couple different copies of the program, then the answer is yes. You can run one off of one data vendor. You can run the other off the other data vendor. I know a lot of you want to or are using interactive brokers. I do use IB myself on one of my machines. I do have several copies of the program. I do use interactive brokers as my data feed. But you've got to understand the weaknesses. Interactive Brokers is a broker. They are not a data service. They have made their data available to people who want to use it, but their primary focus in life is a broker, not a data service. So while it offers a real nice little backup or alternative feed for you, it's not the best thing to use if, for instance, you go on a 4-day weekend in Denver. You miss all of your data with interactive brokers. And right now you can refresh the last day's data, and hopefully sometime in the future you will be able to refresh more than that. But right now I will miss all of my data, so what I have is I actually have also an account with, wherever they are, QuoteCom. And so basically what I'll do is I'll come in here, change my machine that I run off interactive brokers, change it to QuoteCom. And I only track a handful of symbols, so I just simply change the syntax for the symbol because they are different. And which brings up another question. I know when I was on the hotline or helping Carlos with the support line, a lot of people will ask and call for symbol information. The symbols are all different based on the data vendor that you use. Your first line of help for any symbol issues that you have is call that data vendor, not Carlos. Believe me, you wouldn't believe the number of calls Carlos gets. He's a busy guy, so you know, you can maybe help save him a little bit by going either to the website for the data vendor you use, and I know eSignal has a great website with all your symbols and things. QuoteCom has the same. I'm sure they all have the same. So, you know, check with your data vendor before you call Carlos for symbol help. So anyway, that's enough of that. Any questions? Is that good?
That fills in the days?
What?
It'll fill in the weekend when you're gone or something like that?
Yeah, and I'll hit that later. I'll go over that later. But yeah, you'll need an actual data vendor to go. If you're using IB, you will not get backfill but for the last day. So if you went away for a week or 2 weeks, you'll be missing all those days. You'll need some other source to get that backfilled data in. And so that's basically what I do is I'll go to QuoteCom, I'll type in the date that I want to fill from and go up to the current date. And then I'm back up to speed and then I just go back and change it to IB. Okay. Next thing you're going to want to do is create a symbol. Now Carlos has a zillion different ways to do the same thing in this program, which is good. How did I tell you in the book? File, symbols, new symbol. Okay, so I told you to go up here, say File, Symbols, and New Symbol. New symbol. And that'll take you to this dialog box. But perhaps an easier way to get to the exact same place is you just type on the N up here, the icon that has an N for new. Oh, what's this? What happened there? Did I just lie to you? Oh, that's new chart. Whew. Oh, well, excuse me. We'll just go with that. Okay. See what I tell you. I don't know everything. All right. Anyway, this box, again, should be to some degree self-explanatory. What you're going to do is suppose, like, okay, I know everybody likes the Russell, everybody likes the ES. So you're first going to figure out what exchange you trade on. So you've got a whole list of exchanges here, as you can see. So you're going to need to select the current exchange that you want. Select that. It'll ask you this, default times. You can just say yes for now. If you're going to set up a futures contract, you don't really have to use these folders in particular, but it's certainly a wise thing to do. It helps you keep your data organized in a fashion that you can easily find it later, especially if you're tracking more than one symbol. I know there are some of you who only trade one thing and one thing only, but this is, a good way to keep your data organized. So you'd click your futures file if you're going to do a futures contract or an index or a stock, okay? So you just click whatever folder is appropriate for whatever you're setting up. Hopefully, most of you are all going to be checking real time, but then for those of you who have end of day, of course, you're going to have end of day checked here for the particular symbol. And you're going to do this process for every symbol that you have. So you may have end of day data for some things, you may have real time data for others. So you need to check whatever is appropriate. By default, the real time comes up, in the real time version anyway. The units, once again, if you're trading bonds, you're going to select 30 seconds. If you're trading 10-year notes or 5-year notes, they trade in half 30 seconds. So you're going to say 30 seconds and a half. If you're trading, options on bonds, I believe, aren't they 64ths? But who knows? Who cares? John, aren't they? Yeah. So options on bonds are 64ths. If you're trading the regular stock indexes, you're going to choose decimal here. You're going to tell it how many decimal places, 2 decimal places, and you're going to put in the tick size. On the Russell, tick size, decimal 2. Tick size on the Russell is what? 10 cents, okay? On the S&P, what's the S&P? It's a quarter. So you're going to put in whatever your minimum tick size is for that particular contract. If you're trading the Dow Mini, you're going to put in 1 because it's a minimum tick size that you have. If you're trading some of the Forex stuff or the yen or the British pound, the euro dollar, you're going to put in 0.001 because once again, that is your minimum tick size that you can have on that contract. So you need to put that in there. And we'll say ES down here. Your description, you can type anything in for your description. I'll show you later where you can either type, on your charts, when your charts show up on the screen, you can either have in the title bar the symbol or the description. I typically use the description and have them show up, so I would just give you one word of caution if you're trading, say, stocks, for instance, and you have some stock with a big long name, International Business Machines, Minnesota Mining and Manufacturing. Well, you can put that in there if you want, except that if you want to use that for your title bar, suddenly it takes the entire width of your title bar and you've got no room for anything else in there. So I generally, personally keep the description short. I usually do nothing more than use the symbol itself. But you can use anything you want. It doesn't really matter. And then you get down to the symbol. And again, you got to enter the symbol syntax for whatever data provider you're using. If you're using eSignal, you're going to have ES. What are we on? We're on Z now. So you're going to be, Z5. ES space Z5. If you're using QuoteCom, you're going to use 5Z. If you're using Interactive Brokers, this will be a real test. You're going to use, I'm not even going to try, I'll show it to you later. But what you can do is, if you're not sure what the syntax is or what you need to type, you can just hit this help button right here. And once again, amazingly, Carlos brings you right to the page that you need for your different data vendors. And 4x on the e-signal, I know that's been a hot topic, and you guys can thank me for this comment that Carlos put in here. This is A0, not A the letter O, because I guarantee if you put the letter O in here, you will not get quotes for your 4x symbols. So you can see here it goes down. If you just go down to the various vendors that you might be using, you get directions on any syntax things that you need. And here is your symbols syntax for interactive broker stuff. If it goes there. It came up behind. Get rid of that. So here's your symbol syntax for IB. You got the symbol, you got an up caret, you got the type, which would be a FUT for futures, which I believe he has down here. But anyway, I don't want to go too far into that. But anyway, here is your syntax that you would use for IB. So you can easily go there, and it's always there, so just hit that help key if you have any symbol issues. Now your trading time, you notice your time zone is grayed out. There's nothing you can do. That's set up somewhere else, and it's basically operating off of your system clock. So it's always New York time minus whatever time zone you are in. So if you're in California, it would say -3. If you're in anywhere on the East Coast, it would be +3. No? Uh-oh. Uh-oh. Oh, the exchange. Okay, excuse me. Sorry. I'm used to living in Southern California. It's actually New York minus the exchange time. To my own time? Exchange to my local time. Okay. 2 hours, yeah. Right, it's mine. Right, right. Okay. Anyway, it's grayed out. You can't change it, so don't worry about it. How's that? Trading time. This is where you can go and change. And if you need to do any of the 24-hour contracts or something, it may take a break during the course of the day. Here's where you can enter the times that you need, because you may have a contract that doesn't trade on default exchange times, because any and every contract, you know, has their own hours, and they don't all trade the same hours, of course. So you can change that right here. One nifty little feature is if you have to change this, you can say, I'll just do it for the sake of doing it. If you type 9 o'clock here, and you don't want to have to type all this in, all you got to do is double click that, and every single one of these is now changed to 9 o'clock. So that makes it real nice and easy for you. So if I want to type 8:30 back in, I just type it here at the top one, and I double click right inside that box, and all the other time zones change. And of course, you check the box or not check the box to actually select that day. Now, if you trade a market that has a break sometime during the course of the day, you click this break, click that break button, and you get a whole new set. And so you can set up your times for your other, you know, for instance, a market trades and then it takes an hour break or something and then resumes again, resumes trading again. So you would put your other times in there. So typically this is not something you're going to get into realistically. And if you put in 000 to 23:59, you're just going to collect whatever happens for 24 hours a day. But I don't really recommend that either, because if there's times during the day that the market is not trading, the program thinks that it should be collecting data for that time, and so suddenly you got this big blank chart for however many hours that there was no trade. So you know, don't think that, oh well, I'll just put 00 to 23:59. That's not really going to do you any good. Okay, let's say cancel. Okay, and then this down here, minutes to after close. It used to have a lot more bearing than it does right now today. You know, back in the old days when there was no pre-market and post-market and markets weren't trading nearly 24 hours a day, this had some meaning because you had the last 10 or 15 minutes where the traders settled up trades and everything, and so even though the market closed at 4 o'clock Eastern, and if I say 1 o'clock, it's because I lived in California most of my life, so you know, do the time conversion yourself. But anyway, that gave you the extra minutes for any of those trailing ticks and quotes to come in, any of those trades to get those last settling trades. This gave you the time to collect that, and it would add it onto that last bar without creating an extra bar on the end of the day. But today, you know, it's pretty meaningless because we've got a post session after the market closes, or maybe after I should say the pit session closes. You've got a post market which continues to trade, so it doesn't really help you, it doesn't hurt you. You can leave it like that and it'll be fine. And that's what you do to set up symbols. Is there any, and if you need general symbols help, once again, you've got the help here, which will pretty much take you through all of the information that you have that I just went through for you. So the help is there available to you and is documented. Any questions on this thing?
What if you don't know some of these parameters, for example, the units or whatever, but you know that, I'm thinking about, for example, an index or something, if you want to create an index, is there a way to look at another one and say, okay, what are those parameters, and there's a probability that this is the same one? You go in to see how another one's set up.
And you're assuming that you already have another one set up? Well, okay, it doesn't matter. Yeah, the answer is yes, you could do that. But I would suggest another approach, which is one, you know, again, whether you use an eSignal, QuoteCom, they've got the symbol help there, and hopefully you would be able to tell from there. And worst case is you can also go to the exchange websites, you know, NYSE.com, Amex.com, CBOT, you know, they've all got websites these days, and that really would be the best source. Now I know in particular with IB, with Interactive Brokers, you can actually go to Interactive Brokers website and they will give you the parameters of the contract as well. And if you start getting too specific, they will actually just direct you right off to the web page that you need to go to find out specific contract parameters.
What's the number in the middle at the bottom? Is that nothing we worry about?
You don't see this, it's grayed out. You don't see this, it's grayed out. No, yes, it's a number you don't need to worry about. What it is when Carlos, whenever you add a new symbol, Carlos assigns this cryptic number. It may mean something to him, it certainly means nothing to me, and I've never figured anything out other than I know the number increases generally as you continue to add symbols, and the numbers never seem to go backwards. So you know, it's whatever format that Carlos used whenever he created this system to name your symbols. So right now, if I added this as it was, this incorrectly formatted symbol here would have that number assigned to it. Okay.
I understand now that we can set this up, eSignal users can actually set this up so that we don't have to roll the contracts anymore, we can just go to continuous contracts. How is that set up? Yes, there's where?
Here.
Yes, space. Oh, the symbol. Yes, space. Okay.
It's CAPF, right?
Yes.
Yeah, so if you use an eSignal and you want to use the continuous contract, that's what you would do. I suppose this is a good time for me to get into this. There is another way to set up symbols. You can use what's called global. For the futures contracts, you can use a global futures setup. I have, in all honesty, have never used it, and there's no reason to. And the reason is there's another thing you can do for a continuous contract, which is you can build your own, which is in fact what I do. For instance, if you were creating this, and let's just say, well, let's just pretend for a moment that we're still on the June contract, and I know we're not. You'd come up here and say, what, U5? Yeah, I know, that's September contract. So you know, I had this symbol in here since back in what June or so, when the September contract started to trade. And you are effectively entering this symbol right now as a stock symbol, okay? So there is no difference between, and I'll do a stock symbol real quick just to show you, but you're entering this symbol just as if it were a stock symbol. So now it's time to roll over to the December contract, okay? So what you're going to come here and do is you're going to come here to this box and you're going to edit this symbol, and the December contract is Z. So you're going to say Z5, just change the September to the December, the Z, and say OK. And now in that same data file that you were just asking about a minute ago, it's just going to start putting the December data right behind it. And so you've, in essence, built your own continuous contract. And that is what I do. I don't want to have to trust eSignal or anybody else to, tell me how long back I can go. When I do it this way, I can go back as far as whatever I can hold data for. Okay?
How did you get to that? This is a creative symbol.
I'll do that in a little bit. But I just want to show you while we're here, because that's an appropriate question for the time. So basically, you can create a continuous contract on your own by simply changing the symbol. Now, if you were using the global futures contract, what you do is you set up and tell it what months that it rolls, and then it just starts to collect all that data whenever it comes in. But you've still got to go ahead and change your charts to the new symbol whenever it's time to start trading those. So I say, why bother? It's really not doing a lot for me. Plus, with the global futures setup, you only have the data in the contract in that trading period. So, in the case of the ES, many of the index future contracts that are only trading for 3 months at a time, you've only got the 3 months of data. So if you're going to do any sort of back testing or look back 6 months from now, guess what? You can't. You got to change and go back to another symbol. This way, with a continuous type of contract, I can go back for a year, or again, depending on my time frame and minutes that I'm using on the particular chart. In some cases, I can go back for several years just by doing it this way and building a continuous chart.
When you roll that way, you'll have maybe a slight gap.
On the rollover day?
Yeah.
Yes, you will.
It doesn't have that, it'll just,
It does some math for you. That's fine.
yeah.
That's fine. Whatever you like best. It's a... for the one morning, have you never seen a gap open or gap close? Or, gap up or gap down in the morning? It happens. So, for that one day, for the, I don't care. It doesn't bother me. Okay. What else are we going to here? Okay. For your tick size, and you come down here and you'd say OK, and now your stock is set up. Now your stock symbol's set up. So, whether you're doing a stock symbol or whether you're doing in my style of futures contract, continuous contract, same type thing. So OK, let's get out of here. And now you've got your data vendor. Now you've got your symbol set up. So for all of the symbols that you need to set up, you're going to need to go through that dialog box. The next thing you're going to want to try to do is set up a chart. So now you come up here to the end, to the new. So N is new, and you're going to get this dialog box, and I'm going to go ahead and take this thing off of here. So if your program's new and you'll get that, you'll see that box. So you get this dialog box that comes up. So here are all the symbols that you have listed that you have entered, all right? So you're going to come here, you want to select a chart, you want to create a chart. So you got real time, archive, end of day. Once again, most of you are going to be operating off of real time. That'll be selected by default. If I wanted to create a E-mini chart, I'm going to come down here, click on the symbol, and then I'm going to come down here and enter the times. And I'm going to just say 3 and just hit tab. And you can see that Carlos has very conveniently done a 5 multiplier and a 3 multiplier. I'm going to spend a minute talking about that. Dennis kind of hit it earlier. There is no law, but this is a good time multiplier to use. You want to give, one of the strengths of this program is the multiple time frames. You want to be able to do indicators on higher time frames to help dictate what your trend is and smooth your data and use your lower time frames to take your trades from. Easy for me to say, isn't it? So, there is no law that it has to be a 5 multiplier and a 3, but you will find that that works very well. But for instance, what if you wanted to have daily in here? You can do it. You can easily do it. You can say 3:15 daily, okay? You could say 3:45 daily, all right? You can pretty much do whatever you want, but what I would caution you is this. The reason there's a first thing you want to do is you want to actually figure out how many minutes are in the market how many minutes that are in the market that you're trading. For instance, the S&P, the day session, from 9:30 to 4:15 is 405 minutes. So, it's his fault. So, you then break out your calculator. You break your calculator out. Say, okay, what numbers divide evenly into 405? Well, I'm going to tell you that. I'll make your homework real easy. You start with 1. You say, okay, does 1 divide into 405? Yes, it does. You start with 2. No, it doesn't. 3 does. 5 does. 9 does. 15, 27, 45, 81, 135, and 405. And what you'll see is, the funny thing about math and multiplication, you multiply one number times another number, and no matter which way you put them, they still come up to the same answer. So, you either got 405 1-minute bars, or you've got one 405-minute bar. You've got 135 3-minute bars, or you got 3 135-minute bars. You got 5 81-minute bars, or 81 5-minute bars. So you can kind of see what happens until you ultimately get to 15 27-minute bars or 27 15-minute bars in the course of a day. So what you want to do is figure those numbers out, and those numbers are your key numbers to set your time frames up with. You want to ideally select numbers that are going to divide into each other and divide into the day evenly, so that you don't have, I don't want to get too deep into this. One of my pet peeves is, back in the old days, the market was actually open for 6 hours. And then they put an extra half an hour on at the beginning of the day. Okay, but it used to be open from 10 o'clock in the morning till 4 o'clock in the afternoon. And back in the old days, you pretty much wrote down what your hourly readings were, what your half-hour readings were, what your 15-minute readings were, because you had a big clock face in front of you. So, it was really easy to tell where that big hand on the clock was. But now, you've got a computer that figures all this stuff out. I still don't know why anybody picks on hourly charts, because all you got to do is increase that to a 65-minute chart. It's still pretty close to an hour, but now, instead of having 6 1-hour bars in one 30-minute bar, you've got 6 even 65-minute bars. So that's one of my favorite pet peeves, but I won't go too far into that. Anyway, I'll end that soapbox discussion there. So you want all these numbers to basically divide into each other, divide into the day, and those are the time frames you want to select, because once I get into, hopefully I'll get into encapsulation, that's not a guarantee, but if I get into the encapsulation, you need to have the even number of bars that divide into the higher number of bars. So for instance, let me change that back to 15 and 45. The 3-minute bar will divide evenly. There's 5 3-minute bars in a 15-minute bar. There are 15 3-minute bars in a 45-minute bar, and there's 3 15-minute or whatever. You can see they all divide. That's what your key is. So that's something to keep in mind. And people often say, well, how do I set these up? I know of folks that do 1, 2, and 3-minute. You're defeating the whole purpose of the program, in all honesty, in my opinion anyway, because your 2 and 3-minute are really not that much different than your 1-minute, and it's just, you may as well just be looking at the 2 or 3-minute chart if that's what you want to look at. So keep that in mind, but again, just keep the divisor thing down. And there are numbers that won't go, but you got to find a combination. For instance, you can go 3 9 27. You go 3 27 81. You can go 3 81 daily. So a whole bunch of things that are available to you, and pick numbers that divide. So let's just do that. And then
Volume bars.
I'm not there yet. So all you got to do to create this chart is click OK. I've already got one of these charts, so I'm not going to click OK on it. So you just click OK. Yeah, I'm not going to click. Well, here, I'll do this. Let me do this. I probably don't have one of these. 381 daily. Click OK, and magically, once you have data, okay, you have to have data, this opens up. Now the nice thing about this box is it does not go away. You can click close to get rid of it, or you can start typing in other time frames. So this box will stay open if you want to select other time frames for this particular symbol, or say for instance you wanted to create other charts with this exact time frame on it, you could just come down here and say Russell, OK, it'll create that Russell chart for you. You can come down here and say, and this doesn't really work for the Japanese yen, but I'll just go ahead and do it anyway. So it will just continue to create charts as long as you want. Doesn't look like I have good Japanese yen data, but okay, that's another situation. So anyway, to finally get out of that, you would just click close. You can see here, if you want to click, if you want to create other types of charts, the range bars. If you want to click a range bar, if you want to create a range bar chart, you notice down here it now says range bar instead of minutes. All right, so you're going to pick the ranges. The euro, for instance, I use 20, I think, I forget now off the top of my head, 60 and 180. Now, a range bar chart is a little bit different. I'm not going to go too far into a range bar, but basically what a range bar does, let me say, okay, actually, and I don't want to do that because I've already got it, so let me say 240. I shouldn't have that. Oh, where's the euro? Euro. Ah, okay. That wasn't a good idea, I guess. All right, anyway, what the range bar, I can still describe it actually. This is a, I know what I did wrong too, didn't I? 0.00, 20, 0.00, 60, 0.0240. Does that make a difference? There we go. Okay. Now what a range bar is basically is very simple. I said 20 ticks for the range bar, so every single one of these range bars is 20 ticks. And it will not open a new bar. It has nothing to do with time. It's a great way to smooth your data. I've used them for quite some time. I know Yuri uses them and he'll be talking about them. So hopefully this will save you some questions when he's in his discussion. But basically each and every one of these bars is the exact same 20 tick height, amplitude, okay? And until it could trade in an entire day, just like it did in Orlando, in one 20-tick bar, okay? If you know, you get into a sideways consolidation period, guess what happens? You don't get a lot of little bars and little fake outs here and there when it goes, just creeps up just a little bit enough to maybe take out the last pivot or down to take out the last pivot. It doesn't do that. It prints one single bar. So I highly encourage you to look at them. Yuri's going to spend a fair amount of time talking about them when he speaks. And it's a great little tool. So basically, take a look at them. It's a great way to smooth the data. I don't know if you can see the dates here, but well, it doesn't really matter. I might have some bad data because I've been gone. But you can see here, 9/6, and here's 9/7. So 9/6 was apparently a fairly flat day, unless I've got some bad data here, because there's only 4 or 5 bars in there. Whereas 9/7, look how wide 9/7 is, and the same with 9/8. So it depends on the activity in terms of price movement up and down as to how many bars you're going to get on a range bar. Okay? Let's go back. So that's a quick 30 description of range bars. Carlos just put this in, second bars. And if you notice once again down here, it tells you number of seconds. Okay? So now I'm just going to put in 15 seconds. And that's good enough for me. I don't really care. So now the bars are going to be created in seconds. So as opposed to a tick chart, which is pretty close to seconds in many ways. We'll see what kind of chart we get from this one. These bars are all 15 seconds in time. Okay? So each well, you can't see anything here. Each one of these bars is 15 seconds. So, you know, once again, take your pick, take your time frame, do whatever you need to do. What else? Volume bars. Now you can see it turns to volume. So let's say I want to say, oh, I don't know, if I want to use the, say I want to use the euro, I'll say, now this, what this is going to do is tell you how many contracts. So now, as opposed to time or range, this is going to tell you that the, oh boy, I definitely got some bad data. Wow, what happened here?
I don't
did?
Yes. And volume went into. No, now it's volume, okay.
Says yeah, I don't know what happened here. Well, in any event, it doesn't matter the fact that I've got bad data. But what this is telling you is this has nothing to do with amplitude in price. This is how many contracts traded in that bar. So each and every time a new bar is formed, you had that number of contracts in that bar. So if I said 200, so each one of these bars, and again, this I don't know what's going on here, but well, I do know what's going on. My data's screwed up. But each and every one of these bars that are formed are 200 contracts in volume, okay? So that's another thing to look at. And you can tell the activity of the market by, once again, how narrow or wide the day is. You'll see a lot of times a very narrow day will have very little range and it'll be real choppy, whereas on the big days where you got big volume coming into the market, whether it be up or down, doesn't matter, you'll see a big wide day and you can tell at a glance, gee, I had a big wide day, and usually those are going to be the days where you had a good run, whether it be up to the upside or to the downside. So it's another neat way to look at the data. What else? Is there anything else there? Tick bars, I think you guys all know what tick bars are. You're going to do the same type of thing. You're going to say, if your dentist, he's going off a 70, I don't know what else he uses. I don't know if he uses, I don't know, 210, 600, I don't know. But whatever. So you're going to just place that, and you notice this changes to tick. So you're going to be doing that for whatever time frame you want to trade, for whatever type of chart you want to set up. And same thing, if you wanted to do this on a bunch of different contracts, you could just go down and select the different contracts and say OK. Over here, let's explain this real quick. You notice this little box down here. What this is supposed to be doing is taking the 10 last days and giving you an estimate of the average volume, or in this case ticks, the average number of ticks per day in the last 10 days, okay? I don't know if that looks right or not. That doesn't look right to me, but obviously I have some problems with data on this machine. Anyway, so you can get a look and maybe take a look at it, because I guarantee you, if you're trading something like the British pound, you may want to do something with some short period of ticks, but on the other hand, if you're doing well, that's actually, I'm kind of getting off base here. It depends on the contract you're trading and how you want to do it, how you want to set it up. But that gives you your estimate there. So, and then if you just want to set up daily, weekly, monthly charts, you're going to do that. So that's where, wait a minute. That's where you're going to set up daily, weekly, monthly. Any questions on this box?
Back to range day or range bar.
Yeah.
And it gave the option to use tick data.
Oh. The answer is you don't have to. The answer also depends on how short a time frame you're trying to trade and set the tick bars up for. If you're using the range bars, I'm sorry. If you're using, say for instance, the E-mini, okay, any of you with experience in the E-mini knows it can click off a couple of ticks and a blink of an eye. All right. So if, for instance, you set up a range bar as 0.5, which is 2 ticks on the E-mini, you definitely need to use tick data. Okay. The difference is if it's a really short time frame, you want to use tick data. If it's any other time frame, you can use tick data, but you don't have to. You can use, you don't have to check that box, and it will use the 1-minute data to fill in those bars. So basically, if it's going to be something that's going to occur potentially faster than a 1-minute bar will occur, then you want to do it. On the other hand, if you're using a range bar in the S&P and you're using, I don't know, a 2-point range or something like that, anything can happen, and I know a spike can happen up or down. Greenspan gets up there, he has dramatic effects, but typically speaking, the big difference is whether it's going to be created by using the tick data file. There's 2 data files, a tick data file and a 1-minute data file. So if you're using a longer time frame, it doesn't matter. Question back there.
Say
Same one. Okay. Oh, good. Good. Okay. All right, let's close this. And let's close this. And let's close this. And this. And this. Okay. What are we doing next? I don't know if anybody's following along in the book. I have no idea where we are, but I know I'm going in the right direction. Okay. Chart setup. We did the time frames. Let's go to default chart parameters. Let me bring up a chart. You bring up a chart by saying V for view. A lot of people seem to create their charts over and over and over again, not realizing that they're all on the machine once it's created the first time. So if you're one of those, basically V for view will give you a list of the charts that you have. And back to where I told you about the folders, you'll notice that I have the futures folder, and here's the future symbols that I have. Here's the index folder. Here's the indexes that I have. Here's the stocks folder. And although some of these are indexes, but that's okay. That's the stock. So that kind of keeps your data organized in that fashion. So, and they're all alphabetically listed here. So let's pull up an E-mini chart. Of course, maybe I should create a new one, huh? Maybe I should pull the projector so you can't see what I have on my chart, huh? Let's do this one. I just created this one. Okay. So. Default chart parameters. Default chart parameters are right here. Utilities, global settings. This page is your default chart parameters. So whenever you go through those first steps, select your data vendor, put your symbol in, create your chart, your default chart parameters are coming right here from global settings. So whatever you have here is whatever that chart is going to be created in. You can do everything you have available, the colors, the type of chart, whether it be open, high, low, close, candlestick, volumetric, line chart, any of these colors, the number of bars, your live arrow. I would suggest this does not come click by default. If you like to use trend lines, basically it comes unchecked by default, which would just basically create an array for you from point A to point B. But personally, when I draw a trend line, I want it to be extended. So if you check it here, the trend lines will be extended for you. Show indicator names on the chart. So, you know, these are my default parameters, not that there's anything special about them. But this one I'll spend a minute on is your number of bars. If you don't want to mess with this stuff all the time, which is fine, most people don't set this number to more than 5,000 at the most. Really, 2,000 typically is going to do most of you just fine, but anywhere between 2,000 and 5,000 is a good number because it doesn't overwhelm your computer with having to recalculate tons of data and tons of indicators every single time you get a new tick in. The higher you have this number, and I don't care how big a Pentium 4 you have, you know, we're getting ready to come out with dual core processors, so that may make a difference pretty soon, but right now, I don't care how fast your Pentium 4 processor is, if you've got a ton of charts on your screen, if you've got a ton of indicators on your screen, you will bog down your CPU. Your data is going to be slow, you're going to be screaming, you're going to be mad if you even happen to notice it. And then finally, when you try to place an order, you'll notice it because the price is nowhere near where your chart says. And you're going to start wondering why. This is probably one of the reasons why. Just one of them. Could be a reason why. So keep this down. In real-time trading, anywhere between 2,000 to 5,000 is more than enough. More than enough. If you figure out how many bars, 2,000, okay, I said there's 135-minute 3 bars in the course of a day, so 1,350 bars would be 10 days, 2,700 bars would be 20 days of data. Now, how many of you go back more than 20 days to look at a 3-minute chart? Probably not too many of you. So, you know, 20 days, 2,700 bars is 20 days of 3-minute data. So you just don't need a big number there. The max number is 30,000. Actually, it's now 27,900. But so basically, the max is 30,000. And if you're going to do back testing and systems and things like that, which I'll get into much later this afternoon, that's when you may want to change this number. Okay? So other than that, leave that like it is. Now, that's the default chart parameters. If you want to change the chart parameters from on the chart that you've created, you can come up right here to this icon where it says Chart Options, click on that, and now these are the parameters of this specific chart. Not another chart, not every chart, but just this specific chart. Here's the parameters, and the even easier way is if you come up here to these words, Fibonacci Trader, quick little shortcut Carlos put in here. You click on that, and that brings you to the exact same dialog box here. Okay, so now if I wanted to change this to candlesticks, I change that. If I want to take that outline off, I change that. If I want to change the flat bars, I change the color there. You can select your Heikin-Ashi bar type down here if you like Heikin-Ashi. And when you click that, then your data is changed accordingly. So this is the parameters for the individual chart, and you can change any of your parameters here. Anybody questions there?
Yeah, is that permanently attached to that chart in the future?
Oh,
When you pull that chart up again?
Whatever changes you make will stay there, yes. Yes, so that chart will stay just like that until I go in there and change it. So I can come back in here and change it to an open, high, low, and close, click OK, and it will stay like this until I change it. So yes, it stays that way, and whenever you want to make a change, you simply go to Chart Options, or like I said, just left click one time there, and this dialog comes up. So while we're here, I talked about encapsulation very quickly. This is your encapsulation for your next bar and your highest bar. Now what your next bar and your highest bar is, when we set up the 3 time frames, okay, we set up a 3:15 in this case, you can see up here in the title bar, hopefully, that it's a 3:81 daily. That's the time frame of this bar. If you want to change the time frame of this bar, and you may or may not have it, I think it's default, you come down in here to the lower right-hand corner where it says TF, all the way down the bottom right-hand corner. I can see some people stretching, but it says TF. You click on that TF, and it brings up your time frames dialog, and you can just go ahead and change this to 15 and leave that at daily if you want. So you can change this to any time frame that you want as well just by doing that. So let's just click cancel since I'm going to leave it. So anyway, that's your title bar will tell you what time frame you're using. And so basically right now, the 3-minute is your own period, which is the bars you're looking at. Here's the encapsulation next, which is the 81-minute bars. And here is the encapsulation for the highest period, which I am going to change the time frame right now because you can't really see the encapsulation. So let's change this to a 27:81. Okay. And now, hopefully you can see that it's kind of faint, but can you see the purple, everybody? Okay, so that what the purple encapsulation is telling you is each purple box is an 81-minute time frame. So that is telling you what what it's doing on an 81-minute bar basis, while still having the detail of the 3-minute bar. Okay? If I wanted to see what happens in the 27-minute, I change it to there. And these 2 buttons are just on or off. You click it once and it comes on, you click it once and it goes off. So, and you can click both of them, so you can see now the 3-minute within the 27-minute within the 81, which this now comes back to what I was trying to say earlier, is if you don't have multiples that divide into each other, now you've got boxes that are just kind of like offset. And they just don't line up correctly. So that's one of the reasons why you pick the numbers that divide evenly into each other. But if you go to that chart options box that I was talking about, this is where you can change the parameters here. And I typically change this to 2 from 1, or to 1 from 2. Okay? And the highest bar you can change there. If you want to change the color, which I normally do, to a dark gray. I'll do it light gray since we're here. You can change that, and then they're a little bit less obtrusive. So you can still see them, and let's change that purple since it's so dark. Or you could make it thicker if you wanted to. Okay? So that's where you change the encapsulation. And the encapsulation is a pretty neat feature too, because what I will typically do is I'll have daily as a time frame. And so now, let me just show you real quickly. So if I come back down here to time frames, and let me just say, for instance, daily, weekly. All right. Now, while I may be trading a 3-minute chart, okay, the white boxes are now the daily time frame. Okay, so each white box is a daily time frame. So at a glance, I don't know about to any of you, but to me, I want to know where yesterday's high and low were. I want to know what the highs were of yesterday. I want to know if we're breaking into a new high or if we're breaking a new low. At a glance, I can see right there where it is. I don't have to sit there and guess which bar it was on. I don't have to guess or anything else, interpolate. I can just look at it and say, okay, here was the high from yesterday, here was the low from yesterday, here we are. Or even on a bigger time frame, on a weekly, there's your weekly box. If you can see, I didn't get data from Friday, I guess. Why do I have 4? Oh, it was a holiday on Monday. So you have Tuesday, Wednesday, Thursday, Friday. So, you know, your purple boxes are now weekly. Okay? So, going back to chart options. Here's your grids. Here's where you're going to change your grids, any of your grid colors. I'm not even going to go into that. If you want spreads, if you want to trade a spread chart, if you want to trade a gold versus silver chart, or a 30-year bond versus a 10-year note or 5-year note, you would just simply select this. It brings up your symbols list, and you select the symbol that you want to use as a spread, and then, you know, tell it down here whether you want it, you know, to divide it, to add it, to subtract it, whatever you want it to do. So if you wanted to do something like that, this is where you set that up. And your sound, if you want to create a sound file, I had to reload this machine not too long ago, but I used to have a sound file that pretty much told me if I was off in the kitchen getting something to drink or something, I had a sound file that came up and gave me an alert that, you know, I've got a trade to do. So you can record a WAV file and put it in here just with the, you know, regular old Microsoft recorder, create a WAV file, put it in there. It'll show up right here, and then it'll play, you know, play that WAV file whenever you want your alert to come up. So that pretty much is the chart options dialog. Yes.
The next bar and high bar where it says use on period format, does that mean use the same colors and the same bar thickness?
You're right here?
Yeah.
When you're using the own period format, the own period is formatted in bars. So now, instead of it being a box and encapsulating it, it's giving you the open, high, low, and close in bar format. Okay? So, yes, at the end of that, actually, I think it builds real as the bar is progressing, because I know the boxes do, but I never use it in this fashion because that to me is, I don't like it. I don't like it. So I never use it. But I know the boxes will build in real time as the bar goes on. So that's, you know, that's here.
Terry, is this chart option even, again, just for this chart?
Yes.
So, I mean, how do we change for example, the encapsulation of color from purple to whatever on a global basis? I couldn't find it in the global.
I don't think you can. I don't think you can. No, you can't. Is Carlos here? No, I don't believe you can't. You do it, but you know, once it's changed. Well, actually, there's one thing. Let me look at one thing. I hate to say. No, you got to do it by chart. You got to do it chart by chart. I don't know of a way you can do it globally. So it was the same on every single chart, you know, as a default. Okay. What else do we want to do? What time did we start, Ron?
Quarter after 20 after 1.
All right, we're going to take a break here in just a minute. I just want to do one other thing. Did you have a question, John?
No, I was just going to say that I know that on mine, for whatever reason, it doesn't matter what chart I got it on, it turns out to be white, you know, for the next. The color stays the same. I don't have to only set up once and for all the charts. I don't know. What else we put it all in? For that next,
You know,
I don't know what, I don't have to.
you know, it's one of those things. You know what? I think I said, it wasn't my disclaimer, I don't know everything. Yeah, I'm not sure. I'm not sure. Okay, one last thing. We're going to take a break in just a minute. I just want to do one last thing. Were you going to say something else?
No.
Okay. I just want to do one last thing, which is some of these global settings. Under global settings, you can also set up some alarms and stuff here. This is what I have. This is slightly different, and I'll go into this a little bit more later. But right down here, I believe you have this box checked as default. And I'll get into that in the next hour. But basically, it says show menu on drawing tools buttons. Well, here, I will check it, and I'll show you what it does. I'll check it here. But you can take a look at these buttons here. It's kind of what I would recommend you use. You certainly don't have to, but I know that's different than the defaults. I'll go over some of these very quickly. Where it says deselect crosshair manually after use. All right. What happens is on the crosshair, all right, well, let me show you real quick. I just checked that box. Oh, I must not have checked it. Okay, let's do this first. Okay, suppose I use a crosshair and I'm looking at my price up in the upper left-hand corner. If you notice, it doesn't, my price tag isn't along my cursor, right in the corner of my cursor. I don't like it there, so I've got it on a separate detached window up here in the left corner, which I'll show you on one of those other boxes right where we are now. So you can see that as I move my crosshair, if you don't have that box selected, then every time you let go of your mouse button, you've got to come back here and select it and hold your mouse button down. So right now, I can let it go as much as I want, use the crosshair as much as I want, and it stays selected until I come up here and physically say, okay, just give me a regular cursor now. So now I'm back to here. So that's what that box will do for you, because otherwise, with this box unchecked, then as soon as I use the crosshair and let it go, guess what? I'm back to a regular pointer again. So I've now got to come back up here and select it again and use it, and oops, I slipped. Oh, I got to come back here and select it again. So that's one of the things that I prefer to do. Let's see. Show crosshair line, vertical line in all charts, and I just learned in Orlando that I guess this actually shows up on all charts on the same time frame. Frank seems to have left the room, but you know, I think that actually comes by default. Show values on a separated window. If I don't have that checked, which I think is actually the default, and I come up here and I select a crosshair, now, you know, this bugs me. I can't see the high and the low because this box is in my way. Okay? Now, some people I know like it better that way. Personally, I don't. I don't want this following my crosshair every place I go. You know, I hate to have somebody follow me around like that. So basically, I just come here and select this button here, and see, I still can't get rid of that crosshair, but that's okay. All right. Deselect tools manually after each use. You can select that. Basically what that does is whatever tool you're using, it'll stay on that tool until you deselect it. But other than the crosshair, most of the tools, you draw a fib expansion or a race tracement or something, you do it one time and then you're done with it. So, you know, I don't have to go back and click to say, okay, now go to a regular cursor again. So I don't recommend checking that button. Select tools for all open charts. You know, that's a real personal choice button. You know, that one, basically, if you had, that really comes into play when you have multiple charts on your screen. Say I had 4 charts on my screen, for instance, and in each corner there was a single chart, okay? If I'm working on the chart down here in the lower right, but I actually happen to be clicking on the chart up in the upper right the last time I did any clicking, and had it selected, when I go to select my tool, well, that tool is going to be active on that upper chart, not the one that I really wanted it for. So, you know, personal choice whether you want to use that one or not. I don't, as you can see. Scroll bar, I suggest checking this one, scroll chart using left mouse button. What happens if you do that, or when you do that, is, I've got to change my crosshair. If you hold your left mouse button down, you see the arrow turns to a cross left-right arrow. Now you can just simply hold it and move your data back and forth. So it's a convenience feature. And while we're talking about moving data back and forth, for those of you who don't know, you can also use the left and right arrows on your keyboard to move it one bar at a time. Okay? You can move it one bar left, one bar right, whichever way you want to go. And if you're way back in your data somewhere, you've got a scroll bar up here as well. If you click on that, well, it's normally, if you're at your most recent data, this box up here is green and not red. Hopefully you can see that. And then you've got a scroll bar at the top, okay? So you can do that. And if you're way back somewhere, you can just click on this arrow to the left, and that will take you to your most current data. And now you're right back to your current data. So, and then click back on that green button and your scroll bar disappears. Okay, just the two last things I think here. Let's see, okay, now here, when I talked earlier about creating your symbols, here's where you can check. Show symbols, not descriptions. Okay, so if you want to see the symbol on the chart, you type that. In my case, I just type the symbol anyway, so it doesn't really matter for me. But you can see up here at the top of the chart, I use ES, and this is my continuous chart, so I say ESC. So I know that this is my S&P mini continuous chart that I'm using in this chart. So that's what you'll get up there, and that's what happens when you select that. Show symbol button on charts. Okay, check this box down here in the lower right-hand corner again. You see that says SY. Okay, that's your symbols button. So if you wanted to keep everything you had on this chart and just change the symbol, say you were going through a list of stocks or something, and you wanted to keep all the same indicators, your stochastic and your CCI and whatever you might have up there. So basically all you'd need to do is, click on the symbol, type in your new symbol, 3M, IBM, HWP, or I guess HWP doesn't exist anymore, HC, whatever it is now. HPQ, yeah, CPQ, I don't know, whatever it is. Anyway, that's what you do, and that's, otherwise if you don't have that box checked, this SY box down here will not appear. And if you want to get rid of it, that's how you get rid of it. Okay, and let's see, show time frame button. Oh, I did that. Oh, okay, and then the next one is the time frame. So if you want to get rid of these buttons down here in the bottom, you just click these boxes off. Okay, now, the last thing, and I'll hit this one down here on the bottom real quick, draw box to insert text. I never use the text tool, but I prefer to have the box drawn for me because otherwise you've got to draw the box itself, and the text tool for me is kind of confusing, but again, I never use it, and that's why. So you can decide which way you like best there. Show tips, that's when you put your mouse over the buttons. I don't know if it'll do it now. No, it'll give you a little tip as to what it is. Show the price tag on the charts. That's your price thing over there. And this one is the last one I'm going to show you, and we're going to take a break. So if you check this button here, when you come, say for instance, to the Fibonacci expansion tool, my little tip comes up, and then I click it one time, and now it says use, parameters, or erase all. Well, once you go in here and you set up your parameters for this thing, they're set. You don't need to set it up. So now I've got to come over here, click on the button, and say use to use this thing to draw in my expansion, okay? And I don't want, it's one extra click. It doesn't sound like much, but when you draw these as much as I do, it's an extra click. So basically, if you come over here to your global settings, once you've got your parameters set up, you click that off, all right? Now, instead of having to say, click on the button and then use, now when I click on the button, it's all ready to use, okay? So now I just draw it, and it's, I'm there. So it's only one button that it's saving you, but it saves me. And now if you want to edit it, you just simply right-click here, and now you can edit the parameters for this particular one, not your defaults, although you could save it as default and they would be new defaults, but you can just click and change, say I don't want to extend it to the end. So now it just makes the short line, okay? All right. You right click here and you say keep tool live, okay? Boy, do I really want to get into this right now? I can. I can, basically. So let's just say here. I can give you almost a real world thing here. And I could probably do this in a quicker way, but that's all right. Okay, so let's suppose, and I'll just stick with these 3 pivots that I've selected, and I just drew it here, not that I normally would. But suppose I'm here, okay, far enough. Okay, suppose I'm here and I'm expecting, and I do something similar to what Mark does as well, and I'm using the multi-symmetry tool also to determine where I might have a reversal down in here. And so I get this bar, and it makes this low right here. Well, yeah, okay, so it made that low right in there. Okay, I don't really know that that's the low right now. I'm guessing. Okay, but you know, my multi-symmetry tool, I had some other thing telling me that that was going to be the low there, and I said, okay, fine. This is where other things seem to be lining up. This is what I'm going to pick. So, do I not have my magnet on? Oh, that's because I already drew it. Okay. Okay. Okay, so I've got this keep tool alive button going. So I've drawn that in. So now what will happen is, let's suppose, and we already know in hindsight that it's going up from here, okay? But let's suppose I was wrong. Let's suppose that the 2 bars later or 3 bars later, it made a lower low here, okay? Suppose this low came down to here. Well, with this new feature, and this is a new feature in Rev 63, so if you don't have Rev 63, you will not have this feature, so go to the website and download the latest version. So if I get a new low that comes down here, what happens is this point automatically moves from here down to the new low. And as long as it's making a new low, then it will go ahead and continue to make that new pivot point down there. And then when you finally do start to go up and hit your targets up above, you know, it's already set and you didn't have to keep redrawing. Because personally, that's what I would do, is I didn't really care that I was cheating here, because you saw how long it took to draw that, what, 1.5 seconds, 2 seconds? So, you know, I'd just erase it and redraw it, okay? But now with this tool, it allows you that convenience factor of, if this last pivot that you're projecting from is a new lower low, or if you're reversing coming down from the high side, it would be a higher high, you know, it redraws it for you. And just while we're on this tool, I really do want to take a break here, because I see Ron's getting glazed up here in front. So, but what I just want to tell you real quickly is, a lot of people get confused with this tool. This is a fabulous tool. Mark's going to talk a lot about it. I'm not going to spend a lot of time right now. I just want you to know how to draw it. And basically, I'll go ahead and erase it, and I'll just redraw it again. To get rid of it, you just right-click on the anchor line and say delete, or if you have a bunch of them, just say delete all, okay? And then it comes up if you say delete all and says, do you really want to delete all of these? And you say yes. Okay, but basically you come over here, you click on this tool, and what this tool does is it is going to take, and you notice I have my magnet selected. I encourage you to select your magnet, because without that magnet selected, I'd have to actually put this pointer, this pencil, in exactly the right position to draw this line. But with this magnet selected, okay, it actually, I put it near there, and it selects that low automatically for me. I click and hold down my left mouse button, drag it up here to this high. I let go, and again, the magnet selects the high. I let go of the left mouse button, and you see what it says on there? It says click. So it's waiting for me to pick the 3rd point. So I come down here to this low, and I left click 1 time, and it draws the tool. What this tool is doing is taking and measuring, and let's just pretend, okay? Let's all pretend that this is 10 points from this point here to this point here, all right? What it is doing is taking this 10-point range from here to here and projecting that 10-point range from this low here. So this is going up from here 10 points to 100%. So if you see this 100% up here, this is exactly the distance from this 100% line right here to this point is 10 points, just as it is 10 points from here to here. So all you are doing is projecting a range from a different point. So this is where symmetry comes into play, which is what Mark is going to spend a lot of time on. So that is how I use it. And if you actually, let's see, I can probably do this. No, I can't. Okay, well, I can do this then. Where's the shift key? Okay, I can do it this way. Okay, you can see I set my parameters. Mark has his set up a little differently. I use mine a little differently, but we both use it. I use mine as a place to take, as a target tool to take off trades. So if you were, say, for instance, trading a 5 lot, you could take one off at 100, one off at 1.272, one at 618, one at 200. And if you got a real strong move, you still got one contract on for any runners that continue to go. Okay? I can tell you from experience, most rallies will end in between the 161.8 and the 200%, but it also depends on the time frame you're working with. If you're working on minutes and stuff during the day, then that's pretty much the case. If you're working on a daily or weekly chart, it's a little different story. But that's pretty much the extreme of whether it's a run up or a failure, a move down. But 1.272 is a pretty high probability target to reach, as well as 100%. But typically, what I'm looking for is, well, actually, this move worked out pretty good too. This was a good unknowing demo here. If it breaks the 61.8% is the way I use it. If it breaks the 61.8%, I pretty much expect it to go to the 100%, and then on to the 1.272. With one little caveat there, what I want to know is, once it breaks the 0.618, I will come in here and edit this single thing. I'm not changing every other one, just this one. And I say, okay, I want to know where that 0.786 mark is. And then once I break the 0.786 mark, that's kind of like my final yes. I'm highly confident that it's going to hit the 100% or the 1.272 target at minimum. Does it always do it? No. There is no such thing as the Holy Grail. But does it do it on a high percentage of the time? Well, right here in this example it did. And I don't know. Yeah, this looks like I actually do have the end of the day in here on Friday. So who knows? Maybe Monday it'll come up here. So, you know, these are good points to take your profit. And really, even if you were coming up here and you took your profit at 100%, say you're a one-lot trader, you took your profit at 100%, you know what? You got the high for the day, so are you unhappy? I don't know. Let's take a 10-minute break? 10-minute break. What symbol? Oh, I'll go into the, well, here. It's right here. You're welcome.
Do you click on the magnet before you do the...
No, you just leave the magnet selected all the time.
Oh, okay.
It's either on or off. You just leave it on all the time. Just leave it on all the time. Go ahead. You can come on. Well, initially you're doing it. You are doing it initially. Okay. But if you say keep tool live, if you here, I'm going to show you. I'm going to show you. Hang on. If you click on this anchor line right here, right click, and then you click on keep tool live. Okay?
The number of bars in the chart,
Yes.
does that have anything to do with the amount of data that's saved on your hard drive? Well, in a way it does, but I mean...
Yeah, exactly.
I mean, if you...
Maybe I should, especially when I go to the...
let's say you have...
Yeah.
If you have 10,000 bars saved...
Okay. Oh, ready for hour 2, 3, 4, and 5. Okay. That was your last break of the day, by the way. I'm going to talk till this evening when Tim comes on, so I hope you enjoyed that break. Okay. There were 2 people that I told to remind me of something when I came back, and I know Paul's one of them. What are you supposed to remind me of?
Initially set up the data for a signal.
No, that wasn't what we still were saying. He had a great question. You don't remember, huh? Okay, next, number 2. Who was number 2? Okay, there you go. He's good. He remembered. Paul, keep thinking, Paul. Okay. At the end of the day, say for instance, especially if you're using IB and you have an ISP like I unfortunately have now. I'll tell you, in Southern California, I had the world's greatest ISP. You know, it's one of those things you hate to love them or something like that. But they were a great ISP. You know, anytime I had a problem, I would look at everything else besides my ISP because they were so reliable. But now in Georgia, I wish I could go through a day and not have an interruption. In any case, especially if you're using IB, but in any other vendor as well, if you have some sort of temporary internet interruptions during the course of the day and you've missed a few bars, you can, at the end of the day, come in. You can do this during the day, but I don't necessarily recommend it unless you've lost a lot of data. But you can come in and select File. Whoops. Hang on. Hit the wrong button. File, Symbols, Symbols List. And I know, Carlos, there's another way to do this. This is just the way I do it. And if you have the real-time folder highlighted, okay, as it is right now, real-time folder highlighted as it is now, you right-click one time and you get, what did I do wrong?
Do you maybe need to do each folder?
No. No. Did you change this on me too? I'm looking how to update at the end of the day. Update the 1-minute bars. You changed it on me. He is just a sneaky kind of guy, I tell you. That's the way I used to always do it. Rev 63, and you'll notice, possibly, if you actually read the verbiage that I have written in the manual, there's a few places where I refer to going in. Hang on.
Are you connected only either? Right now, do I know?
Oh, I'm not connected, so that's what my problem is. Okay. All right. That's good here. Okay, well, I can connect, and I'll show you here in a second. But I just want to point this out, that there are, I think, a couple references somewhere in the book, and I don't know where it is, but where I said, you know, go to the open area of the chart and double-click, and you'll get this menu. Well, guess what? In Rev 63, Carlos fixed that issue, and now you have to right-click to see this menu. Okay? So if you see a place in the manual where I have said you just double-click and you'll get this menu, and I show you this menu, well, you no longer get it by double-clicking there, so you have to right-click now, because this is technically a right-click shortcut menu. So he has actually made it that, as opposed to before you could just about do anything and this menu would come up. So in 63, you now have to right-click to get this menu. So that's one thing. And then let me go back here to global settings. Oh, no. Utilities, data source, select real-time data feed, and I'll say quote com. Hopefully it's not going to ask me to log in. It is. Can I get away with this? Cancel. And this is one thing that I wish you would change too. There we go. Okay, now if I say File, Symbols, Symbols List, I select the real-time folder, I right-click one time, and magically now we have a menu that gives me quote com server, update 1-minute bars. So I can click on that, and it will ask me what date I want to collect. In the case of QuoteCom, these are very slightly different depending on the data vendor. Okay, so your data vendor, depending on who you're using, may be slightly different than this, but you know, read the verbiage. Some of them, I think eSignal, you have to put in a start date and an end date, as I recall.
It just fills in automatically.
Be slightly different than this, but you know, read the verbiage. Some of them, I think eSignal, you have to put in a start date and an end date, as I recall.
It just fills in automatically.
Yeah, end date.
No, this is, I'm telling you how to update it in the event you've had an ISP problem during the day. And you want to make sure that your data is intact and good, clean data, okay? So somewhere in the middle of the day, you lost your internet connection for 3 minutes. I'm just giving you a way to verify and ensure that you have it. If you don't care about those things, if you trust the eSignal servers to update you for your problem that you had, not for their problem, but for your problem, then you can do that. I'm just giving you a way that if you aren't quite so trusting, or if you're using a broker such as IB for your data feed, I just lied. You can't do this with IB. There's another way you do it with IB. Okay, so anyway, basically this is what you do, and you click OK, and then it will go in every symbol that you have in your real-time folder. You will update every single symbol, okay? So your data will be up to date.
How do you do it with IB?
Well, you're going to have this. Okay, here's another thing. Somebody else asked this question. I think this is what you were supposed to ask me, Paul. If you right-click on the chart in the open area of any chart, okay, you have this menu here. In case of eSignal, it'll say eSignal server, okay? In the case of IB, it'll say IB. I don't actually think it says server. I think it just says update IB or something like that. But anyway, you would go here, click on this, say update 1-minute bars. You notice that it gives you a choice for 3-minute bars. Why is that? It's easy. It's because I have a 3-minute chart here. If I had a daily chart or a 27-minute chart or a 15-minute chart, it would give you an option to update 15-minute bars or 27-minute bars or 81-minute bars. So whatever your time frame is. Just the what? Oh, eSignal doesn't have that? Okay, all right. It's been several years since I've used eSignal, so sorry. Okay, so anyway.
Volume bars as well as minute bars? Would update volume bars?
This updates the symbol. So yes, it's updating whatever data that provider gives you for that symbol. Because not all data providers provide the same thing. Some of the, like I said earlier, some of the Forex dealers and stuff are only giving you last. So you're not getting volume and other stuff, right, Carlos? Yeah, so you're not getting volume and all those other things with some of those vendors and high-low. You've basically got to keep track of it to know where the high and the low were for the day. But hang on. But basically, if you want to update your data during the day, if for whatever reason, you know, you're non-trusting that your data is valid, you can just right-click on the chart, click on this, and say update, and then that will update for this particular symbol that you have selected. So if you have a whole bunch of symbols that you want to do, and if you're doing it this fashion, then you've got to go to a chart for each individual symbol and do this individually. And on the eSignal, Carlos, does this give you a date range here when you do this? Okay, so Paul, on eSignal, you'll put in a start date and an end date. Is it? Yeah. So that part of it's still the same. So you put in a start date and an end date, and you've got to keep in mind eSignal doesn't give you a lot of back data, so you've got to keep in mind if you put in a date prior to what is available to you currently, it won't do anything.
It won't do anything at all?
No.
It won't just change?
No, because you're asking for data that it can't supply you. So it just says, okay, see ya. So the safe way to do it is just kind of incrementally work your way back. And again, I haven't used eSignal for a couple of years now, so I forget all the nuances of, you know, how many days of data they allow you to do in 1-minute data and so on and so forth. So, you know, and I know the tick data is limited, so yeah. So you got to be aware of that as well. Okay.
Harry,
Yes.
if you turn your computer off sometime during the day and leave, then you have to go through this process the next day to update yesterday's data through the end of the day.
Well, that's the way I feel safest doing it, yes. Technically speaking, if you have auto download selected over here, and if your data provider provides that service, then it should go back, technically speaking, and load it. But I really don't trust those kind of things. I'd rather know that I put the date in and that I should be collecting data for that date, as opposed to trusting this box and the data vendor that, yeah, everything's going to be updated from the minute that I, in your case, shut your computer off in the middle of the day. Okay? Okay. John. Symbol feature down here in the corner and types in the symbol. Since the symbol's the same, as opposed to it bringing up his 24-hour chart, it will bring up the daily chart. So I'm not sure if, well, the only way you could change that really is to change the description, so you would potentially know which one was your 24-hour chart as opposed to your daily chart. But in all honesty, I really don't use that feature to change the symbols and change the charts. I just come back over here to my list, and then I just select whatever chart that I want. So I pull this list up, and every chart that I have created already is available to me right here in this list. So that's personally the way I do it. Okay, I think that's it. So basically, you know, just to recap very quickly what we went over is, if you want to select a data vendor, you're going to go Utilities, Data Source, select Real-Time Data Vendor. You're going to then set up your symbols by going to File, Symbols, New Symbol, and go to your Create New Symbol dialog box here. And somebody asked me about editing this symbol once it's created. And once again, you do a right click in the open area of the chart. You say this symbol, and you say Edit Symbol Parameters, and guess what window it brings up for you. So now you can simply change that from U to Z, or from Z to H, or to M, to whatever letter you need there. Okay? So that's the real quick and simple way. So basically, once again, you just right click the chart, say this symbol, Edit Symbol Parameters, and you got your Edit Symbol dialog box up now, and so you just come in and change whatever parameters it is that you wish to change. Okay? Sound good? And then, so once you got your symbols entered, you're going to do a chart setup. So you're going to go to the End for New. You can also hit the Chart button, and that brings up your current charts. But this will also give you the ability to do New Chart here. Once again, Carlos gives you a ton of different ways to do the same thing. But, you know, new for new chart, just create a new chart, gives you this dialog box where you can put your parameters in, create whatever type of chart you want. And then remember your default chart parameters. Oops. Your default chart parameters are here under Utilities, Global Settings. So this is your default chart parameters that are going to be creating your new charts with. And John, you also had something on here. There's this button here, Display Local Time on Charts. Obviously, I don't use it. As you can see, it's not checked. I just allow my charts to collect in whatever exchange it is that I'm trading, and I don't really worry about it for the most part. But this is a nice little feature if you live in a time zone, which most of us do, other than the time zone that the exchange is in. So it will basically put your charts into your local time zone. The only word of caution that I would give you to that, which is kind of one of the reasons I don't use it, is I used to once upon a time speak regularly with a fellow that many of you know, Ron, and he's in Montana, and we had this communications issue of what time. Well, wait, is that 10:30 Eastern time, Mountain time? You're talking 10:30 Pacific time? So, you know, you can potentially create a problem there. So, you know, we always just spoke in exchange time, which, you know, you can then do your own time conversion and figure out what time it is you're really trying to look at and talk about on the chart. So, you know, that might be the only downfall to that. But other than that, if you're not talking to anybody and not really discussing individual patterns or anything like that for specific times, then, you know, that probably would not be an issue for you. So that little box will display your charts in local time. So you can check that if you want. And then, John, you also asked about this. This was the box, Show Menu on Drawing Tools button, okay? So if you uncheck this, when you go over here to select, and this brings up one more issue, when you go over here to select and you click on the tool is ready for immediate use, okay? And while I'm doing it, you click, you hold your left mouse button down, you let go, and then you say click, and it draws it up there for you, okay? And to erase, you just right-click once on that beginning bar there and say delete. Or if you don't have that selected, then you will get into this menu where you got to click it once and then click it again to say use. Okay? So, let's change that back because I don't want it there. What else did we go over? I think that's pretty much, we went over the other utility tabs. Hopefully you guys got all that. Let's move on to what I'm supposed to be covering in the next hour. So, let's go to adding an indicator. Are we doing okay on that first hour stuff, I hope? Yes? Good. Okay, good. All right, to add an indicator. And, you know, hopefully you're following me along in the book, because I know I'm following the book, but I couldn't begin to tell you, and there's no page numbers on here anyway, so I couldn't tell you what page we're on. Anyway, we're somewhere in here. Anyway, we want to add an indicator. So your indicators box, or your indicators menu item is this little lowercase I. If you hold your cursor over that, it says indicators, as you can see up there. So you can click that one time, and if you've got the program new, you're going to get this box, but since I don't want to keep clicking this, I'm going to just go ahead and erase it right now, and it just tells you that you're getting the indicators window. So you'll get this edit indicators window. Now, same thing, Carlos, he is just something. He gives you so many ways to do things. The easier way, and again, this really comes into play once again where you have multiple charts on your screen. Because if you had, again, as my last example, well, I said last example 4 charts. This time I'll say 2 charts. Okay, say you're working on the chart on the right and you want to add some, I don't know, moving average to the chart on the left. If you don't have the left chart selected, then you end up selecting the right chart, which isn't the one you wanted to work with. So probably the quicker and easier way, and I think less known way, is if you remember, if you left click here, that gives you the chart options menu, but if you right click here, that gives you the indicators menu, okay? So now, the indicator's down here, and again, you can do this several different ways. You can select your indicator and click on the Add button, or you can just simply double-click the indicator and it moves up to the top. Now, and then if you want to delete them from the top, you highlight it and you say delete, and you highlight it and you say delete. You know, you don't want to highlight them down here and say delete because you've just kind of shot yourself in the foot, okay? You don't ever really want to edit or do anything with the indicators in the bottom window. That is your default settings. That is your default set of indicators. If you delete it from the bottom, it is not easy to get it back. Okay? So don't delete anything from the bottom, and I also recommend don't try to edit anything in the bottom. Because until you understand what you're doing. Once you understand what you're doing, and say, for instance, you always wanted to use a cyan 34 period EMA for your moving averages. Well, you could then go down and modify it to your personal preference, and then it will be the default. Although another way you could also do that is it will give you the choice to rename it, and you can rename it to a different indicator. You can name it, you know, Ron's special moving average, and now it'll show up there, and you still haven't messed with the default. But anyway, stay away from the bottom as far as editing or deleting. Stay away from the bottom, okay? But now, also another thing is, you know, if you wanted to get to moving average and I'm right up here at the A's, all I got to do is hit the M, and that takes me alphabetically right down to the M's, okay? And this list is, and I'll go to a Z and takes me right down to the bottom to the Z's, okay? So, you know, you can hit whatever letter you want, hit a C. So it'll take you to alphabetically whatever the first indicator on that alphabet is. So let's go ahead and add a moving average, and we can just go ahead and, now that I told you how, I'm just moving down one by one. Smart, huh? And you can also just select it and hit return, and it'll go up there. So if you want to edit this moving average, you simply double click on this thing. Your dialog box for these indicators is pretty much very the same as this right here. You know, they will change very slightly depending on the indicator that you're using, and the reason is some, as you can see right here where it says L number 1, that stands for line number. Some indicators like an MACD has more than one line. Many of them have more than one line, but a moving average, a simple moving average, just has one line, so therefore there's only one line to check. But this is your basic parameters of the indicator right here. Up here in period, hopefully you all know that this program is based on 3 time frames as we went into when we set the charts up. OWN is your bars that you're looking at on the screen. Next is your next higher time frame. The highest is the highest time frame, okay? So on this chart, if you look back up at the title bar up again at the top, you see this is a 3 daily weekly. I probably need to change that actually, but that's okay. It's a 3 daily weekly, so 3 is your own, daily is your next, weekly is your highest. So right here, this will tell you O for own. So this is going to tell you that this moving average right here is going to be on your 3-minute bars. If you double click or type the letter N for next, now this moving average is going to be on your next time frame, which in this case is the daily bars. All right? Critical here. A lot of people don't seem to get this. Click, double click one more time, goes to H for highest. So in this case, the highest is the weekly time frame. So now this moving average is going to apply to the close of the weekly bars, okay? And so that's what this moving average is going to be as it sits right now. So let me go back and just say, let me say next, why not? Okay, now, close. You can change this to the open, to the high, to the low. You know, whatever parameter that you want to put it on. So basically, if you want it on the close, you can put it on the close. What if you want to put this moving average on the high? Well, just select high, and you can put that moving average now on the high. You can see out here there's a little diamond scroll bar thing. You can click on that, and you'll open the window again. Now, keep in mind that if you say something like median, okay, and come down here and change this, and you click on this thing, I don't have enough indicators in here. I just blew my own demo. If you have other indicators on this chart, they will all kind of show up in this window right here. So what ultimately happens is you get more in this window than fits in this window. And so people will say, if you were on median, they'll come over here and click and say they have, you know, a stochastic and a CCI on their chart. Well, they won't see the close because it's above the median. All you got to do is scroll up. Okay, a lot of people get stuck on that one as well. So be aware of that, because you can have, once you start adding indicators, that list grows and you'll have to scroll up and down to see whatever it is you wanted to put it on. The length should be self-explanatory. It's a 7-period moving average. Let's make it a 21-period. It's a 3-minute chart. Let's make it a 34-period moving average, okay? The offset value. I'll show you. And let's put this in cyan. Okay, so you noticed I clicked on this, hopefully. And if you notice, if you have your PCs, you should be able to see it says color for moving average. Whatever is in this box is what this color on this particular tab is affecting. Because once I show you later where there's multiple lines down here, you'll see if you select the different lines, this verbiage inside this box changes to depending on what line you're selecting, okay? So you select on that, and I'm going to change it to cyan. I'm going to say OK, and now that's the color. So I'm going to just say exit real quick and say exit here. Now I've got my 34-period average I got it on the next period, which is a daily. So what this is telling me is, oh, here it is way down here, and I don't have that much data on this chart. So basically, since it's on a 34-day, let's change this to a 5-day. We changed that to a 5-day, and to do that, all I had to do was click one time on the indicator name, and then the edit box comes right up, okay? So I changed that to a 5. So here's your 5-day moving average on a 3-minute chart. That's pretty neat. This is not the same as if you multiplied out 135 times, there's 135 3-minute bars in a day, okay? And then you multiply it 135 times 5 to get a 5-day moving average. You will see a different moving average than this, because there's a lot more data points. It's going to be a lot smoother. It's not going to give you the same average. So this is actually a 5-day moving average, not an interpolated 5-day average based on a 3-minute bar. So there is a difference, and that is one unique feature about this program. So anyway, you can see that. Now, if I say offset, I can put in 3, for instance. All right. Now what that's going to do, it's going to move this average over 3 periods. Since I'm working with a daily, my daily is the next time frame, and that's what the moving average is on, the next time frame, correct? This is going to move this 5-day moving average to the right 3 periods. So now you can see that it's been moved over, okay? You can see that it looks different. It's been moved over. If I move it over 2 days, you'll see it move back 1 day. And if I move it over 1 day, you'll see this. Now, someone might say, well, what good does that do? I'm not there. I'll show you later. But it's a cool little feature. Now, you can actually put in a minus value, but don't ever do that. Because in hindsight, when you're building, say, for instance, a system, I had people build systems on this, using this, and you know what? It's great, because in hindsight, you knew ahead of time what the data was going to be in hindsight, if that made sense to you. But in the reality, in the real world, when you're trading, you don't know what tomorrow's data is going to be to make your trading decision based today. So never use minuses in there, because that's what it'll do. It will totally mislead you. You will be totally screwed up.
Is there a feature that has displaced the moving average?
That's what this is.
Well, yeah, but
No, yeah, but this is.
it would be negative, and it just pushes the whole thing forward. You will push it back, right?
If you put in a negative, it pushes it back, which you physically can't do in the real world, because you don't know tomorrow's data today.
Maybe that'll be in revision 64.
Yeah, I don't think so.
It'll cost extra.
This is displacing the moving average. If I say 1 here, it's moving it forward 1 day. No, it's moving it forward. Let me do this. Let me put it on a 3-minute basis. No, it isn't. Trust me. Trust me. 5, let's say 34. I can probably see this. And let's do a little bit less data. Oh, and right up here, if you want more bars on your screen, you click here, okay? If you want less bars on your screen, you click here, okay? Okay, now here, we're shifted 1. See this point right here?
Yeah.
You keep an eye on that point, okay? Of course, I'm not sure. Actually, you might even keep this too, because we had one little swing up here. So now let me say shift it 5, okay? Now, see this little point here that was back here? You shifted it forward. This point here was over here. You've shifted it forward, okay? Versus if you try to do this, and again, never do this. I probably shouldn't have brought it up, but you know, I've had questions on it, and people think you can do it. Now you've moved it back, but you can't do that, because see where your data is ending here? Your data is ending prior to the end of your chart, and it's because you've moved your moving average back. So how can you build a system? You can't take a trade tomorrow based on yesterday's data. You know, enough of that, okay? Just don't do it. Remember, never do it. Okay. All right, so there you go. Okay, so let's go back to the edit box. So this is basically, that's your basic functions of what you're normally going to change. Now, your color here will come up and easy enough to see what your color is. Your style, if you want to change the style of the line, the space, if you have dashes, for instance, the thickness, you can change your line to be real thick if you like, okay? It gets grainy there also, if you see that. But you basically just come in here to style, and it's the line type or the style of the lines. The subchart. I'll get into subcharts a little bit later, but the subcharts are 1 through 6. So the chart where your data is chart 1. Anything below that is chart 2, 3, 4, 5, 6. And we're going to get in, I'm going to actually show you this here in just a little bit. So we'll get there, and I'll show you an example of that. So if you have, say, for instance, 2 different indicators that come by default in the same subchart, and you don't want them in the same subchart, you just change the subchart and it plots in 2 different subcharts for you. The symbol. Say, for instance, you wanted to put a circle at the close of the bars. And let's go back to next for this. You would just go ahead and put that symbol on, and now it'll draw that circle. Oh yeah, we're not going to see 34 on this chart. We'll say 3. We're not even going to see too much of that either, are we? Well, if you can see it, it's very hard to see, but there is a dot here, there is a dot here. I would go back into the style menu to change the size of that dot. But that's basically, you can draw a symbol on there if you like. But we don't want that. Okay, then let's go over here. Draw type. You can use a step if you want. A lot of people ask what steps are. Here's steps. Look just like steps, okay? So now instead of being a moving average that is calculating as each 3-minute bar is coming in, well, it still is, except for the fact that it's drawing it in steps based on the day's median, okay? So that's, that's what the steps are. That's what steps look like. Or if you just want half steps, it gives you that formation. So it doesn't give you the upline between the steps, okay? So you can experiment with these different types, but these boxes and everything, if you want, I don't know if a histogram makes sense here, or vertical line, or none. If you don't want this, if you want, I don't know. Actually, potentially in systems, when I might get into it later, you can say none because that will not draw it on there. So you may be using it for something, but you might not want it actually displayed on the chart, so you can just say none, and it won't display on the chart, but it will still be there. It'll still calculate everything else. Exposition, this is something you're going to use next to never, although it will be in use a few times with the echo if you use the echo. And what it does is if you change, you can either use these up and down arrows or just type in the number. Watch the little dot here on this bar, okay? I'm going to type in a 5 and say 50, and it should move out somewhere in the middle, okay? So it will move the signal dot left or right, and here you can actually use a minus, and in some remote cases it does make sense, but again, most of the time doesn't really. Sometimes it does. But anyway, so you use that plus or minus to move this right or left, whether you want this, and this is typically, again, in the case where you have an indicator with more than one line involved. Scale. This is something you're basically never going to use. I used it one time. Carlos gave me an example of another time to use it, but it's just so remote. It's something that you're typically never going to use. The way I used it one time was I wrote an Excel spreadsheet, which you can add in as an indicator, and I had basically, I created a scale based on my spreadsheet, and it plotted a dot according to the scale that I used. But typically, it's there for you if you need it. If you want to use it, you can use it, but you're typically not going to. The alarm results page, now this is, or tab I should say, this is actually, you may use this one. Say for instance, you wanted to get an alarm, and let's change this back to line. If you wanted to get an alarm when your moving average crossed, or the price crossed your moving average, right now I will get an alarm or an arrow that points, well actually if I click here it'll show trade arrows. So this will give me an alarm. It'll give me a physical box that pops up on my screen, and this will print an arrow on the screen. So you don't have to, you can have this one unchecked and this one prints arrows, or you can have both of them checked and this will print up a box on your screen that says moving average crossed at such and such a price at such and such a time, and this one will actually print the arrow for you. And in this case, you can see it says close past line. So whenever it closes past the line, and again, if you click on this, you've got more options. You don't have to wait for the close. You can do bar crossing the line. You can do it on a change of slope direction by a certain number of ticks, as you see up here. Or you can do it in the step direction. So once your steps are going up, then it's going to give you a long. When your steps change direction and start coming down, it's going to give you a short. Okay, so depending on what parameter you pick, but let's just go ahead and say close past line, and you can either take your trade at, where it says here, trade at bars close, trade at next bars open, or trade at nearest indicator's value. This is another thing, never use it. Okay? Maybe in this scenario on a particular indicator, it might not be quite as devastating, but I can tell you in the system area, never use this box. The example I gave in Florida is the same one I'm going to give here, which is every tick that comes in, your indicators are being calculated, okay? Up, down, whatever. A moving average, we're looking at a moving average. It's a mathematical average. All right, suppose you get to the point where your closing price is going to close just above your moving average, and whatever price value that tick needed to be, it mathematically calculated that moving average to be above, or excuse me, the price to be above the moving average. And so if you use trade at indicators nearest value, it'll say go long. And 2 ticks later, it comes back down a tick or 2, and then it recalculates, and guess what happens to your long trade? It disappears, because now it's no longer a long, it's still below the moving average, so it hasn't flipped over yet. And so bottom line, you get a whole bunch of potential whipsaw false trades, and in a 1-minute bar, you can get about 60 trades for what turned out to be no trade at all. So it's a very deceiving thing. Don't use it. It's more trouble than it's worth. So that's my recommendation on that one. But anyway, so we've checked show trades on bars. We've checked alarm on conditions. So I'll say click here, and you can see right here and right here I've got a long. And if I put my arrow right over there and click on it, it'll tell me why. It says indicator moving average by 2 at 12:34.25, now long 1. Looks like it would have been a pretty good short, or a pretty good long signal, huh? Anyway, but if you want to see more signals here, we'll just change this to own. And now you'll see a whole bunch of arrows, okay? So now every time this 3-minute bar closed past the median of the 3-minute moving average, or 3-bar moving average, I should say, you get a long, you get a short. So that's what you got there. So that's your arrows, and I can't really simulate your alarm box because there's not a current trade with it. So now one other thing is, let me do this. Let me change this to a 34. I'll leave it on own, and I'll take the arrows off. This is a relatively new feature too. I believe this came out in '63. This says paint lines. Now here's your paint line colors. So you're going to go green by default, and you can change these. All you got to do is click here, and it brings up your color palette, okay? So you can change those if you want, but by default it's set long green, short red, flat yellow. I must be getting tired. I forgot my basic colors. And so what this does is it's going to paint this line. Now, as you can see, where it crossed above the 34 period EMA, it was red back here, and now it's green, okay? And it's hard to see, but it's actually red there because it closed below, so it was red, but it turned green again, and now it's closed back below the moving average, so it's turned red again. So now, just at a glance, you can see, you don't have to sit here and focus in on, gee, is that really above or is that below? Because the color of the moving average is telling you whether it's above or below. Because we know when it's above, it's green. When it's below, it's red. And in this case, since a moving average, you're either going to be above it or below it. There is never going to be a yellow section because you're always above or below. But there are other indicators that you may have a flat period somewhere, some way, somehow. Okay. So that dialog box basically explains, moving averages aren't too bad. If you get some indicator, and this kind of goes back to the number of bars you have on the chart, some indicators just, for instance, a standard deviation, Bollinger Band. You don't really need to, generally speaking anyway, you don't need to recalculate that thing on every single tick that comes in, especially if you have some wider time frame on your Bollinger Bands and you're watching a 3-minute bar and you got your Bollinger Bands on the next or higher time frame. There's no reason to continuously recalculate that thing. So you can click on this and basically it keeps the value of the last bar's close until the next bar closes, and it saves a lot of CPU time and CPU cycles. And again, this is more the issue where you have a lot of charts, a lot of indicators, a lot of bars. Typically, you don't have to do this. It's just a suggestion. If you have the scenario with a lot of charts and bars and indicators and things, you might consider doing that. But that's an option. You don't have to, but you can. It's there. The other thing is show values. Now, you can show the value out here of where the moving average is, okay? And you can also say show all. And this is always an amusing one to me. So you can see all the values as each bar closed, but I'm not so sure. Although it does make a nice little reversal pattern here when it crosses, doesn't it? Maybe we found some new use for the text in here. Anyway, so that's what that does. So that is basically the overall edit dialog function for pretty much every indicator. I see a guy raising his hand, going to probably ask me some stumping question here. But anyway, we're going to go into some more things and look at some other indicators in just a minute, as soon as I answer Peter's question. But is there any other basic questions on here before I get to Peter's question? Go ahead.
There's just one thing that I always wonder, is there any way to change the font when you show them the values or not?
Peter.
On the alarm results.
Well, hang on. I don't, Carlos? Is there? You can't change that font.
You can make it bigger. Get up of there. That's 60G. No, you don't have that even there. On that special, on the global settings, on general, you have an option that you can make the font bigger. On the show values, yeah, the font values, yeah, but this kind of thing will be bigger.
Is it 63 or 60? Okay, I've only got 63. 63 is current. 63 is current. Okay, Peter.
On alarm results, where it says number of ticks, does that mean the indicator needs to go?
Hang on. Good question. Excellent question. Excellent question. And he didn't even stump me. Oh, I like it when he does that. Okay, this says close past line. All right. If you select bar crossing line, it says number of ticks. If you say change of slope direction, it says number of ticks. If you say step direction, number of ticks disappears. So what that's telling you is you can say, I want this to, well, let's just put the paint bars back on here. And let's just do this. Let's say, what is this? What chart is this? ES. Okay, let's see, a point is 4 ticks. So let's say 3 points, which is 12 ticks. Okay? So I'm going to say, I don't want it to change colors because I just selected paint bars, right? And here, I'll even show the arrows. I don't want it to change, give me a signal until it goes 12 ticks past closing above this moving average. Price closing above the moving average, okay? So I'm going to say exit. And why I thought I had my arrows on. Oh, I did. It's all green. Okay, it's too much. All right, so let's do a few less then. How about 2 points? We'll say, 8 ticks. There you go. Okay, so now you can see here where it turned red. Well, you can see we were below the moving average all through here. We kind of crossed up above, but we never got red until it went 2 points below the moving average, 8 ticks, okay? So when we finally went 2 points below, which is right here, is when it went red. Now, we actually crossed above the moving average right here, but what were we? Still red. Why? Because none of these bars are 2 points above the moving average. So we finally turned green and turned long when we got 2 points above the moving average. So what that does for you is allows you to put in a buffer for a much better feature actually is if you just simply say 1 tick or 2 ticks. If you say 1 or 2 ticks, and by the way, I'm doing it and I haven't said it. When you change this, come back here and click on this again. I don't know if Carlos has fixed this or changed it, but it doesn't seem to stay there. If you change that number and then say exit, that number will revert back to 0 again. So when you change that number, come back here, click on close past line again, and then it'll stay anchored. And you say exit. And now when you say 1 or 2 ticks above, what it does is potentially take out some whipsaw trades. In the case of a moving average, again, if you're calculating, it's a mathematical average, right? So if you mathematically close, 0.000001 above the moving average, well, hey, you're above the moving average, so you should be going long. But once again, all it might take is 1 more tick for it to go back down below. So now you're saying, wait a minute, I don't want some minuscule mathematical point to trigger this. I want it to be at least 1 full tick or 2 full ticks above the moving average before it says, yeah, go ahead and go long or go ahead and go short. So that's what that's for. It's a nice little feature, and you kind of led me into the system stuff for later, but in the system stuff, that's what I do to eliminate a lot of whipsaw trades when I'm using, really there's a number of indicators that you can do that on. Go ahead, Peter.
Slide line off. What's that?
I think you need to see Carlos. In some indicators, and I don't think it really applies to the moving average, in some of the indicators, what it will do is I don't think it applies to the moving average. In some of the indicators, it will plot forward a value or level or something like that, okay? Based on what the data is now, it's able to know where, say for instance on a stop and reverse type indicator. Yeah, boy, this is a real test now. I think fast point switch might do it. No, it doesn't. Oh, and if you want to delete this indicator, all you do is right click and say delete, and that just takes it away from this chart, okay? Anyway, there are some indicators that will plot a value or bar or something out in advance, and the live line off will take that off, so your indicator is only with your current data. Yeah, it will not put that future bar out there, okay? Okay. Go ahead, one more, and then I got to keep going here. Go ahead.
I was just I think if you had fast point switch next as the indicator, it would show the feature, and then you can take the live line off.
No, no, it shouldn't matter whether it's next or own or whatever, because if it does it on that particular indicator, it'll do it. Okay, so, okay, here, let me just get rid of this. Okay. William Blau has a book. It's a very inexpensive little book, 25, 26 bucks. I'm not necessarily recommending that you all go buy it, especially those of you who are mathematically challenged. But it is a good book from the standpoint that he goes into a pretty good description of his indicators. Robert Krauss worked with him, I believe was a personal friend, and to the best of my knowledge, this is the only program around other than some of the copycats who have copied it and put it in their programs. But the Blau indicators are all here. I encourage you to experiment and play with them. They're really some of the best indicators I've ever seen. But what I wanted to go do is show you the Blau mean deviation indicator. Oops, this one. And there's, well, I'm just kind of, I'm trying to build on your familiarity with the indicators. Here's what I'm trying to do right now. So we're going to go ahead and add that one up here. And I'll go ahead and click the edit box. I'll click the edit box. I will click the edit box. What's going on? There you go. Okay. Click it enough times, it'll work finally. Okay, so once again, as you see all the same tabs out here to the right. So just like before, they're all the same. The difference being in this one has a few different parameters. Instead of just one length value, one length as a straight moving average had, this one has 3 of them. So I'm going to go into something very quickly. I'm going to change these default values here from whatever they were to 144, 13, and 1. And I'm going to, well, I can show you. I don't have to tell you. Well, no, I'll tell you what. I'll tell you what. Well, I know what they were. They were 32, 32, 5, and 1. Okay. There's something that I do, and I've done a long time because I read the William Blau book many years ago. You know, that's actually not bad for a default value for an oscillator, but it's not great. But it's pretty good for default figures. But what you'll see on any oscillators, especially something like a CCI that comes default as 9 as a value, it's just fast. You know, I don't care what time frame chart you're going to put on. CCI is a highly reactive indicator. It's very fast. It is going to give you 150 trades, and if, like Dennis was saying, you want to trade 35, 40, 50 times a day, just keep that on the default 9 and you'll have as many trades as you ever want to lose on. So, you know, but on the other hand, most people use a moving average to determine trend. I use oscillators to determine trend. And the reason is oscillators, as Blau goes into in his book, you can basically gain the advantage of an indicator that really has next to no lag. And I've said this before and I'll say it again, and Dennis kind of hit on it. Indicators don't lead the price. The price leads the indicators. So, you know, that being said, using an oscillator with a longer time frame as opposed to the shorter time frames that we're all used to using them on gives you an ideal, and I could eat my words here, but let's try it. Let's change this to what I started to. Everybody got a mental picture what that oscillator looks like there? Oh, you just want to do things the easy way. Okay, now you've smoothed that oscillator out a lot, but you know, you've got a very coincident bottom down here. As price was bottoming, this oscillator bottomed right there, you know, 1 or 2 bars, and quite frankly, if I had got in and right there on a long, I wouldn't have been upset. But, you know, it goes up, and here's your 0 line way down here. So in this particular instance, you know, you were basically going above 0. You were just barely below 0. You switched directions. You went above the 0 line, which is the other way I use it, just as Dennis mentioned earlier. It's either above 0 or below 0. If it's above 0, and I don't care, let me go into that little discussion very quickly. For those of you who don't know, there's 2 types of oscillators. They're either normalized or they're not normalized. A CCI is not normalized, meaning that it's got a free range. However it swings, however high, however low, you know, depending on the minute time frame you're using, depending on the volatility of the market, you know, it could go plus and minus 100, then again it could go plus and minus 200, 300, so it can range wildly. Whereas a normalized indicator is basically something like a stochastic, an RSI, any other number of them that are out there, which are taken on a percentage value, and you're looking at X number of bars in the past and comparing your current data to where your range has been, and that tells you where in that percentage range you've been. Whether you're going to be at 0%, you're basically at your lows for that last X number of period range, or if you're at 100, you're going to be at the highest point in the last X number of days. So you basically got the two type of oscillators. The Blau oscillators, I think, are all non-normalized, as I recall. I could be wrong on that one. But I always, if they're above 0, that tells me, and the 0 line for the normalized oscillators would be what? 50, right? 50 is essentially your 0 line, because if it's above 50, market's going up. If it's below 50, market's going down, generally. So, keep that in mind when you're looking at some of the normalized versus non-normalized oscillators. But I use a long period oscillator, and what this tends to do for me, one, is it smooths it out. It gives it a much nicer, smoother trend. This oscillator in particular is pretty smooth to begin with, so I may have picked a bad one from that perspective, because this is a very smooth indicator. But look at these highs and these lows. It's very coincident in time. Here's the low, there's the low in your oscillator. Here's your first high. Here's your second high. Okay. Here you've got your divergence going right here. You've got, I guess I got my mouse hooked up. You've got your lower price high, your higher oscillator high, and your lower oscillator high and your higher price high. So you've got your divergence right there. Who knows what comes Monday. But anyway, you've got a very nice indicator now. Later, if you determine or decide you want to try to build a system, you've now got a great proxy for price. Okay? So now you can use, instead of the actual price, which is all choppy, you can use a smoothed oscillator as a proxy for your price to develop and determine, to use as a proxy for price to develop your systems. So it's much easier, what do you want to design a system on? A bunch of erratic, choppy data, or a very smooth data source? And for those of you who don't know, you want to use a smooth data source if you can get that.
Even though it has a divergence?
It doesn't matter. Because again, here's a 0 line. So ultimately, unless I had something else to get me out of this trade, it is coming down to the 0 line, as you can see right here. But we're still above the 0 line. So technically speaking, well, in all honesty, I can see that it's got a divergence going, okay? I can see that it's coming down. It is still above the 0 line here. I personally would be very reluctant right here, right now, to be gung-ho about going long Monday unless I had something else proving it to me. Okay, just based on this one single indicator, and I'm not saying that that's my bias or opinion for Monday, but I'm just trying to say that right here, right now, where this stands, if this is the only thing I had to look at, I can see that we had the strength of our trend through here, okay, and now this trend may be, in fact, it is weakening because we've just gone sideways and choppy, so my trend is weakening. So now the question is it going to cross below the 0 line and give me some sort of short signal, or is it just going to come, continue to consolidate sideways for a while, continue to maybe come down towards the 0 line like it did here, because it really didn't cross very low below 0 right here. And you got the same scenario right here, actually. You just drifted, you went sideways in here while the oscillator came down. You finally broke through 0, and if you were extremely nimble, you might have made a couple ticks, but realistically you'd have probably lost money on the trade in here. But anyway, you would have gone short there, but you were turned around right in here going long again. So, I know that the trend is weakening in here, and I got to wait to see something else or a reason to give me a long trade anywhere in here, just based on this. But again, this is not my system. This is not, I just have this indicator up here, okay? So don't copy these parameters or anything like that, Matt. Okay, so we're going to leave that like that because that looks pretty decent to me. Does it? Everybody agree? Does that look pretty good as far as a proxy for price? Yes? No? Yeah? Okay. All right, now, this is a cool feature. This is probably, in most people's mind, a super advanced feature. So pay attention, because I'm going to give you the super advanced feature now. It's called indicator on indicator. I mentioned a minute ago about building a system, and I'm not getting there yet, but let's say, for instance, I wanted to put a moving average on this thing, and I draw it and it goes on my price, because that's where the default is, right, on the close of the price bars, correct? Yes. Well, how about if I come down here and I click on close, and you notice how William Blau mean deviation indicator is now down here, because I've already got that indicator on the chart. So now I click on that. Instead of this moving average now being based on the closing price of the price bars, this moving average is now going to be based on the William Blau mean deviation indicator. Okay? Does everybody follow that? Okay. What is it that you don't follow?
Can you start all over again? I want you to see the individual indicator. What did you click next? Moving average indicator or what?
Okay. I'm right-clicking here on the words Fibonacci Trader to bring up what? My Add Indicator dialog box. Okay? I'm going to go down here and I'm going to type M, and I'm going to click on Moving Average, and I'm going to say Add. Okay? You with me? Now I'm going to click. Well, here, and I'll do it just the way I did it before. I'm going to say exit. I could edit it from right here, but I'm not. I'm going to add it to the chart first, okay? So I just say exit, and now the moving average is this red line. Here, let me expand this so you can see it. So now this is the red moving average, because you can see the color of the moving average, okay? And it's now based on the price bars, right? You with me? Yeah? Give me a bigger nod now.
Yes.
Okay. All right, now I'm going to click on this one time and bring up the edit dialog box. Okay, that's for the moving average. I just clicked on the moving average, moving average, and now I got the moving average edit dialog box. All right, now, right here where it says close, that close right there determines, what is that close? What's that close there? What's that close represent? The close of the price bar, that's right. I could say, I want this moving average on what? The high of that price bar. I could say, I want it on the low of that price bar, right? And that moving average will still be plotted based on the price bar. But I don't want that. I want to be difficult. I want to come down here and select William Blau mean deviation indicator. So now that moving average is based on what? The William Blau oscillator. Okay? Now is everybody with me? Good. And everybody seems to be awake too. That's a really cool thing.
If you change the color, you can see it like yellow or something. Yeah, you can't see it. It's white color.
No. And there's a reason why. And I'm going to get there. Okay? Okay, so now I'm going to say, instead of 7 periods, I'm going to say, you know, let me do 2 periods. It's going to be a very quick moving average. By the way, who knows, rip the mic off here. Who knows if I put a 1 period and forget, let's go back one step. If I have the close in there, come on, whatever. If I have the close in there, that's the price bars, right? Close of the price bars. Who knows what a 1 period moving average of the close will be? Everybody understand that? It's a line-to-line close. So it's basically just, it's going to draw a line from close to close. Okay? Good. Good crowd here. All right, but I'm going to go back here. I'm going to say one period. No, I'm going to say a 2-period moving average. And let's just. Oh, okay, I'll change the color. I'll change the color. Okay. I'm going to change. It's going to change anyway, but I'm not doing. Okay, so now I'm putting this moving average on the William Blau indicator, correct? Okay. Now, what subchart is the default for moving average? What is subchart 1? And where do I want the moving average? Well, you don't know that it's 2 because that's not the default. As a matter of fact, I don't know what the default is. So basically, I'm going to leave it right there for 1 minute. Okay, and it's going to draw this crazy line up there that's meaningless. And if I go back to here, I can see right here what subchart that this indicator is in. Okay? So it's in 5. So right now, I'll go ahead and I'll click here to the edit box again, and I'm going to say subchart 5 because I'm putting that moving average on this indicator that it's down in subchart 5. Everybody with me? Okay, now, so I got my 2-period moving average on my William Blau oscillator, and let me separate this a little bit. And you can see that it's kind of hard to see based on this chart that I'm on, but you can see that they cross over. And basically what it gives you is a nice quick little symbol. And let's do this. I'm going to edit the moving average one more time, and now I'm going to say show trades. So now every time I get a close past the line by, I don't know if I should say 1 tick, I'll just leave it at 0 right now. If I get a close past the line of the moving average in the oscillator, it's going to give me an arrow. Okay, so there's my buy and sell arrows now. Okay, so it would have been nice to take a long right in here, and we're above the 0, so I'm really only going to focus on the longs because what? We're above the 0 line, right? So I'm only focused on long trades. This is printing every cross, but that's pretty valueless to me. But you had a long here, you didn't do so good here, you had a long here, you had a long in here. So I would ignore all these red lines. But let's do something else. Let's change this and say, instead of, what is an inherent problem with a 2-period moving average? It's very close to your price, or in this case oscillator, that I'm using to trigger off of. So you get all these little whipsaws, which is clearly demonstrated by all of these red and green arrows up there. Okay, so what if now I come down here and say offset by 2 periods? Okay, it eliminates a lot of those trades. All right, and now you can also see it a little better. And again, down through here, you're above the 0 line. I'm not looking at taking any shorts in here. If you'd taken a long here, depends on your trade management, if you'd have gotten out or not. But again, you still got that nice long here. Here, I don't know if I'd have closed this out if I'd have gone long in there. But, again, you've got something, and you can play with this. And, I just put these numbers up here. Uh-oh. Okay, boss. Gotcha. I gotcha. Yes, I will. Here. Purple is now white. Okay. And what I'm also going to do is this. I'll be taking over now. I'm going to now paint the bars so it's easy for me to know when I'm above or when I'm below the moving average, because I'm just looking red. As a matter of fact, we can go to the edit thing here. I can go to draw type. I can say none. I can say exit. And now, basically, I'm long on green, and since we're above the 0 line, I'm not taking this red. I'm long on green. Got a little whipsaw there. And again, since we're above the 0 line, I'm not taking any shorts in here. But does everybody understand what I did now? Yeah? Do you think that might be of some value to you? I hope you do, because I find it of great value to me. But bottom line is you can vary this. You can say 1 period shifted 2. You can say any number of things. And I mean, you could say 3.618 shifted 5. okay? And now you got some pretty nice signals there, okay? And, you know, you just watched me. I didn't practice this. I didn't rehearse it. I'm honest, you know? And I don't know about you guys, but I think, forgetting about what I said about above the zero line, I'd have been happy to take every single one of those trades. You're not getting beat up all day. You're not getting whipsawed. That's a 3-minute chart. That's basically Friday. Yeah, that's Friday, because right over here is the beginning of Friday. So you had what, 1, 2, 3, 4, 5. So at the most you had 5 trades, but again, since we're above the zero line, I wouldn't have been trying to take any of those short trades, so that really leaves you to the longs, which were 2. You made a nice profit on the first one, and who knows what you did on the second one. You broke even, you lost a little bit, you made a little bit, you know, depends on your own management. But, you know, this is just the beginnings of something to potentially build a system with. Matt?
What were the last 2 things that you changed? The 3.168, what was that? Was that the period?
Yes.
Period and offset.
And I just spilled. Don't anybody tell the hotel. Yes, that was the period and the offset. But ultimately, you know, I'm not saying that this is the magic numbers. You know, please understand that. These are not magic numbers, okay? I just picked them. I picked them, and you see what I got. Now, will that work over a long period of time? I don't know. That's actually what I'm going into next. But, you know, I just picked them. So you know, I don't know, you can pick 2 and 5, you know. But now keep in mind, the more you offset it, or the longer the length is, it's a moving average. What happens the longer the term moving average you have? You put more delay into it. There's a certain point in time where delay is okay, and there's a certain point in time when delay is just killing you, okay? Because ultimately, if I made these shorter, these little arrows would move. The shorter I make the periods and the shorter I make the offset, the further to the left those arrows are going to go. The longer the period, the longer the length, and the greater the offset, the further to the right they're going to go. Okay, here. I'll show you. I don't have to tell you. I can show you. So let's just for instance say, oh, 13's a great number, and we'll go to 5. Now, oops, I don't want 25. I want 5. So now watch all those little arrows up there move to the right. All right, you ready? Here you go. In this case, it really isn't all that much worse, but you can see. I mean, you know, you had that first red arrow back over in here somewhere, and this green arrow is down a few bars, and same up there. So, you know, something for you to play with. I think it's a great little feature. So does everybody understand that?
Just have one question.
Yes.
What do you click to make it have the arrow point?
Click on the moving average. Click on Alarms Results. Check this box that says Show Trade Arrows. And then I will not show trade arrows, and you will have the arrows disappear. Okay? All right. You guys all have it, okay? And you'll also notice that this toolbar of mine doesn't have all of the tools yours does on it, and that's because there's several of them that I never use, but all you got to do is click down here at the bottom, okay? And it says add or remove buttons, and so you can see I never use the zoom in, I never use the zoom out, so I have unchecked those buttons. I never use the vertical line, I've unchecked that. I told you earlier I never use the text tools, and I've obviously unchecked those. Same with circles and ellipses. So basically I never use those tools, so I just got rid of them to make space for these tools over here that I do use, and to also make room. So basically if you wanted to take out or add or whatever, you just click on these buttons. But that's that. So let me move this back over to where I have it, because that's where my preference is. And somebody asked earlier about how Dennis was doing something, and it was with the horizontal line, which is right here. And is the blue as opposed to the green, because the green one is just a price and the blue one is a horizontal line. And so to help you out, I can go down here, put a horizontal line there, and then I can click and say thickness. I can say 3. Okay, and does that make the 0 line easier to see down here? Okay, so that's what you do, and you can change the color of it as well. You just simply right click, and you can see here where it says color, so you can change that white line to any color you wanted. You want to change it to, I don't know, well, let's make yellow. So now it's yellow. So, you know, that's the way Dennis was drawing those lines up there earlier, yes.
Is there any way to click on the bar, say that high bar up there, click on it and somehow have to draw a horizontal line from there? So at the high of the bar,
With magnet, maybe?
without having to go through and.
Just use magnet.
Well, so you mean like here?
Yeah, is that the only way you just can't click on the bar? Because what happens is you've got to move it around and try to get it.
With a magnet.
With a magnet, it'll just.
Actually, it doesn't. It doesn't. You have to. You have to position it, and partially the reason is you may not want to draw your horizontal line at a specific top, a high or a low.
But I do.
Well. You know, what can I tell you? I know, but no. But the answer is no. Okay. How's everybody doing? You getting tired? You getting worn out? Good. Good, because I'm not quite ready to take a break yet. I'm getting close, but I'm not getting ready. And how long have we been going? For an hour? Oh no, I got plenty more to cover. As a matter of fact, I might even be starting to need to hurry up a little bit more. All right. Okay, line chart. Line chart. Oh, okay. One more. Okay, I'm just going to erase this. I'm going to erase the whole thing. Delete. Delete. Okay. Okay, now, this is another cool little indicator. This is the last indicator I'm going to talk about for the most part. And I think it's a great indicator, which once again, I don't think too many people know about. It's called line chart. Okay, see it right here, line chart. I'm going to add that. Say, for instance, you were interested in following, internals. Okay, you put this line chart in here. Okay, and you go double click to edit it. And you come down here to this symbol box, you click on symbol, and now I happen to have mine under stocks. So say, for instance, you wanted to add the, I don't know what I got in here, New York trend. Now the only catch is, I've got a 3-minute chart that I'm looking at, okay? You need to have a chart with the same own period for the line chart indicators that you're going to put in here. They got to match. So I've got to pick a chart that I have a 3-minute chart. So I've got the trend right here at 3 minutes. So I'm going to click on that one. And so now the trend is going to be displayed in subchart number 2. Okay? And now, as opposed to having to have multiple charts and moving them around and finagling them and playing with the number of bars on the screen to get everything to line up vertically, it's lined up. So you now know exactly when your trend has made a peak or a low and what your price has done. You want to put the tick on here. Well, you come down, you say line chart, you add. You click on line chart here, you say symbol, you come down to tick, where's tick? Oh, here you go. Tick, okay. Now, if you want the tick to be imposed on top of the trend, I guess you could leave it in subchart 2 here, but I think my preference is I'm going to go subchart 3. Actually, as a matter of fact, I'm going to go subchart 2 with the tick, and I'm going to go subchart 3 with the trend. Okay, so now the trend is going to be below the tick. You see that? This is where it tells you what subchart you're in. Okay? And you also notice number of lines and it says 4. Let's go there real quick. Notice how it says 1, 2, 3, 4. And you notice in the print here it says color for open. Line 2 is color for high. Line 3 is color for low. And line 4 is color for close. So you could just, you know, manipulate those however you wanted if you so desired. Okay? So now you've got the tick and the trend directly lined up with price, directly below price. And now the last feature that I showed you, putting an indicator on an indicator, you can now put your moving average right on your tick if you want, or on your trend, or do whatever it is. And you would now simply, as you pull up your indicator menu, you would now select this or whatever, the close of this or the close of this, to do your moving average on, just like we did with that oscillator. Or the Keltner. There might be a problem with the Keltner, actually. Yeah, I know there was a problem that he needed to fix. So you can put the Bollinger Bands on, but you can't do the Keltner. He needs to fix something. So you can't do the Keltner this way, in this form. So that is a little bit of a downside. But you know, I think it is of value to me. I use it that way. So okay, is it a quick one?
Yeah. If you're using the same 3 time frames in both charts, can you put the next time frame on your subchart?
What do you mean? Can you put the next subframe?
It would be a 3 minute instead of being on, it would be 3.
Only by encapsulation.
I'm not sure what you're asking me.
You got 3 things up there. Each of them have the same 3 time frames.
Yes.
Okay. Could you put, like, for instance, the trend as being the next time frame instead of the own?
No.
If it's 3 minutes.
No.
Okay.
I don't believe, no. Because what's going to display is the own period. And it has to be the same time period. I mean, you can't do that with price. You can't display the price up there in the next time period. Am I missing what you're asking me?
He's saying, can you put the indicator on for the next time frame?
Oh, can you put an indicator on the next time? Oh, yeah. Actually, I think the answer is still no. I think the answer is no, because it'll default, because basically in this fashion, these indicators really are a subset of the price, and since that is the case, you can select open, high, low, and close to put, say, keep it simple, say a moving average, but I believe if you select next, it will default back to the own, because that's what it's displaying it in, is the own. So I'm about 99% sure that the answer is no. You can try it yourself and find out, but I'm pretty sure the answer is no. Okay, I'm going to take a break in just a minute, but I want to just do something very quick. Yuri's going to talk about this. Mark is going to spend a lot of time on it. I just want you to know how to draw the tools so you will know how to draw them. I went into the expansion tool and I showed you how to do that, and very quickly to recap, you just click on the tool, you say, you left click, hold your mouse button down, go from a low to a high, you let the left button go, and then it says click on there, and then you click the left mouse button one more time and it draws it for you. To erase it, you right click here and say delete. If you want to get it to the downside, you're going to go from a high to a low. You're going to let go of the left mouse button, come here and click on another high, and then it gives you the projection down. Okay? The fib retracement tool is very much the same thing. Here is the fib retracement tool. You're going to go from a low, left click and hold your mouse button down, come up here to your high, and let go, and it will draw your fib retracements on here. And right click and say delete or delete all if you've got a bunch of them. And the multi-symmetry tool, let me go into that very quickly. You're going to once again left click here, and this is going to be, Mark uses this, well actually he does the regular tool, but this is an easier way to do it. And if he's back there, I don't know why he doesn't use this. But anyway, you left click and hold down your button, you come down to this low, you let go. You can do up to 10 lines. So you left click and you hold your button down, you come down to this low and you let go. you left click and you come down to this low, and you let go. Oh, I keep forgetting I got a mouse here. You left click, hold your button down, let go. Okay, so now I didn't draw a 10 in. You don't have to draw a 10 in. You can draw up to 10. So now to project where my symmetrical retracement should be, I come up here to this point, and instead of left clicking, I'm going to right click, and amazingly, that's the area that it should have retraced to. But as you can see, we've kind of broke it, and also I really didn't do this like you would. I'm just trying to show you an example. But it will draw the lengths from here to here, from here to here, from here to here. Wherever you drew those lines from, it'll project it down from the high that you chose and then down, or on the upside it's just a reverse. You go from low to high, low to high, low to high, and right click on a low, and it will project it to the high. And this is a really cool little tool as well. And to delete it, you just simply, once again, right click and say delete. No. No, it's not an average. You are actually measuring this physical distance. Pretend again that this is 1 point from here to here. Oh, let's say this is 2 points from here to here. This is 1 point from here to here. This is 1 point from here to here. This is 2 points from here to here. When you projected from here, you would only get 2 lines because 2 of them were 1 point and 2 of them were 2 points. So you would get 1 point down and 2 points down. So you're measuring the physical distance and then projecting that physical distance of all the retracements that you drew in there down from this point that you pick. Okay?
Which tool do you click on to do that?
That is the multi-symmetry tool. It is right here. Okay? And the same, there's 2 time projection tools. The one with the blue lines is a 2-point line, and I'm really not going to draw this correctly at all, but you would say hold your left mouse button down, and you can see where the red is, I hope, and let go of your button, and that will project out in time potential turning points, okay? And I'm just showing you this for example, so don't take a look at this as if it's, you know, really a crummy tool. And that's a 2-point tool, which is the one with the blue lines, and the green and red lines is a 3-point tool. So say for instance you go from this high here, you press and hold your left mouse button down, you hold it till you get to this high. Now let's go to this high. No, actually, let's go to this high. You let your mouse button go, and once again, look what it says, click. So now you take your 3rd point, which is up here, but I've got the red magnet on, so I can just click here, and it projects this distance from this high to this high from this point in time, okay? So Mark is going to go into depth on time and price squaring, and that's what he's going to be talking about, but he's going to spend the whole afternoon on that. So that's how you draw the tool. My parameters, I know, are different than his, but again, we both use the same tool but use it slightly differently. So I have a ton more stuff to do. Is there any questions on what I covered in this last hour or so? That's either good or bad, I'm not sure. So, okay, why don't we take I'm ready to. Okay. Okay, we got most of the room back. Where's that Texas boy Matt, Linda? This is the guy that calls me all the time and asks me about what I'm going to talk about next, and he's not even in the room. He's going to miss the Holy Grail. Okay, what the plan is next is to talk about the system area of the program. It's how to create a mechanical system, but I don't necessarily trade completely mechanical systems because I know that there are, well, quite frankly, I'll say this right up front. Maybe I should wait to say this because there still are a number of people not here yet, but there is no such thing as a single best stop, you know. Sometimes you're best to use a trailing stop, sometimes you're best to use a fixed stop, sometimes you're best to take your profit when you form a pivot at a top or at a bottom. So unfortunately, with mechanical systems, you're never going to create a single best stop. Why I got into that already, I have no idea. But anyway, this whole idea is to give you an idea of how to build and use the system area in the program to, even if you want to just determine and decide, like I showed you the indicator on indicator with the oscillator and the moving average, even if you simply want to determine, gee, you know, I don't need some fancy elaborate thing, I just need some sort of a guide to give me an idea when to go long or when to go short. This tool will give you the ability and give you the test results to be able to determine whether you're completely off track or whether your idea has any sort of merit at all. So you can use it in any number of fashions, and I pretty much do it to keep myself honest, because if I have to stand here and admit that I have a problem, one major problem I do, it is pulling the trigger too much. So I kind of use this as my safety vehicle to, you know, keep me away from that mouse button. It's kind of like, you know, move back from the mouse and your account won't get hurt. That's kind of what I need, and I use those for that reason. But really, you can still use this and subjectively trade some of these things, keeping in mind again that, you know, you're never going to design a system with a perfect stop. It does not exist. So I want to talk about considerations for designing your system. There are people that talk to me sometimes and they say, gee, you know, kind of like Dennis said earlier, I want to design a system that does everything. Sorry, doesn't happen. You've got to decide previous to even going into trying to do anything. What are you trying to do? Are you trying to ride the trend? Are you trying to ride the trend in coincidence with the larger time frame trend? You know, the daily trend may be up. Your 5-minute bar or 3-minute bar may be down. Well, you can trade a reasonable trend on a 3 or 5-minute chart on a downside, but, you know, you're going contra trend to the daily time frame. So, you know, are you going to try to line both of them up? You're going to try to have a 3-minute in an uptrend as well as a daily in an uptrend. So are you going to do that? Are you going to try to catch reversals? Are you going to try to, I don't know, what else is there? Catch breakouts, you know, runaway gaps or whatever, breakouts to the upside, to the downside. So, you know, you've got to decide what kind of system that you want. You've got to decide what your system is going to do for you. Many years ago, you know, it used to just kill me. Thank goodness I've gotten over this, but it used to just kill me when I'd make, say, something, I'd make a 10-point profit and, you know, the S&P went 30 or 40. You know, the fact is, you've got to design your system to do what you want it to do, and the amount of times that it runs that 30 or 40 is pretty rare, so you've got to just live with it. Accept what your system is trying to do as that. Now, in my case, I have a lot of systems, and part of the reason is each different system tries to accomplish a different goal. So I may have a 3-minute system that I may only catch part of a trend, but I may have a 45-minute system that I'll hold contracts overnight to try to catch that 40-point move. So I have different systems to try to do and accomplish different goals. And that's reasonable too, as far as I'm concerned. Others would argue that point. Data considerations. You know, you've pretty much got to, oh, that's nice, my battery's full. You've got to take into consideration, if you just started collecting data in the last 10 days, you have nothing to work with. So until you have, you know, a lot of bars, and I can't really give you a time frame, because if you're trying to create a system on a 1-minute bar, which let me tell you right now is nearly impossible to do in this type of fashion, you know, 30,000 bars will only take you back a few months, but that's pretty much all you're going to do, because you've got a bar limitation of 30,000 bars. On the other hand, if you're using daily data, boy, you want years. You want years of data. So, and to some degree, I almost discourage trying to create daily stuff, because it's tough. But so your data, you got to have enough data, and I have, if I don't say so myself, a pretty good description of a test procedure, which actually I'm going to get into in a little while. But you need to have enough data to do some sort of back testing on, to have a good enough data period for in-sample data, and to have much more out-of-sample data available to you. Okay? Design a simple system. Oh, I'm just reading the objectives. That's what. Okay, here was my objectives for this part of the course. I want to go over data considerations. I want to design a simple system, add profit and protection stops, interpretation of the system results page and equity curve, ideas for trading or not trading a system, and if time allows, and I can almost guarantee you right now it's not going to allow, I've got a quick little money management scheme to give you in case I have the time. Okay, so now that I've done the objectives and almost spent too much time on those, what do you want to do? So what we're going to do is create a trend following type system. You got to determine your time frames as well. That's very important. You know, Ron's time frame or definition of a short, intermediate, long could mean everything to him and be absolutely meaningless to me. You know, Ron may want to trade 55 tick charts and 1 minute charts and is a medium time frame for him, and a long term time for him is a 3 minute chart. Whereas for me, a short time frame chart might be a 9 minute chart. You know, a long time frame might be several weeks. So, you know, whatever your buddy says doesn't really matter. You've got to determine what short, intermediate, and long means to you, because you are the only person that matters to you. So it doesn't matter anybody else's definitions. Your definitions are what counts. I kind of went into this already. Whether you want to scalp, just take a few ticks at a time, whether you want to trade with the trend, contra trend trade, or trade reversals. You know, you got to look for the indicators that suit that type of style. All indicators don't suit all different types of styles. For instance, you know, the average person would use a moving average, which I hopefully to some degree dispelled using an oscillator in place of a moving average to determine trend. But most people would use a moving average for a trending type system, and that's okay. But there are other ways to do things. So you've got to find the indicators that will do your job the best. If you're going to use a reversal system, I suppose you could use a moving average, but I don't know that that's really the best indicator to try to design a reversal system on. I would probably be looking at some sort of an oscillator to to create a reversal system on. It's much more quickly reacting. And again, you know, are you going to trade with the higher time frames? This is where the beauty of this program really lies, is the higher time frames, the next time frame and the highest time frame. So, which is also, again, why you want to have some separation. Because, you know, if you're trading a 1, 2, and a 3 minute, who cares what the 3 minutes doing? It's just not that much different than a 1 minute chart. So, whereas on the other hand, say you were using a 3 minute, 45 minute, and daily. Now you can actually use the daily data to determine, say for instance, your overall trend. Is your trend up? Is your trend down? Well, if your daily trend is up, personally, I want to trade with the trend. So I'm going to focus and build my system based on taking long trades. I have lost more money in the past years trying to take contra-trend trades, you know, against the bigger trend than I could even imagine today. I pretty much like to stay on the side of the bigger time frame trend, and I'll put it this way. There's an old axiom I heard somewhere many years ago, could have even been from John for all I know. I'd rather be wrong on the side of the larger time frame trend than be wrong against the higher time frame trend, because that's when you'll get killed. So take that for what it's worth. What else here? Systems. I can show you systems that have beautiful equity curves, and the great majority of you would never be able to trade them, and I only base that on our brokerage firms out there tell us that your average account size is $5,000 or so. You know, if you design this beautiful equity curve system on a 45-minute chart that holds overnight on the Russell, say for instance, and you design in a 5-point stop, you know, forget it. You just give me the money, and I'll say thank you. I'll even take you to dinner, and you know, we'll part friends, and you won't have to go through the aggravation of losing your money. $500 a chunk at a time. So, you know, when you create these systems, you know, what time frame are you trading? How well are you capitalized? And again, not that you might have $100,000, $500,000, $1 million in your account. That's certainly no guarantee that you're going to be successful. It's certainly no guarantee that you're going to be a highly successful, profitable trader, but I guarantee you this, you'll still be around a lot longer with a starting $1 million account than you will with a $5,000 account if you're using a 5-point stop on a Russell contract overnight. So you've got to take these considerations into account. So, you know, if you got that small account, and again, you know, I consider a small account. The SEC has pretty much said that if you're going to day trade stocks, if you're going to be a pattern day trader, you got to have 25 grand in your account. But realistically, if you pay one commission, even at IB rates at $1 for 100 shares, you know, you pay one commission, you're now below 25,000. You could no longer day trade. So really, anything under 30,000 is a small account. And yes, I know the margins are much less on futures, but that doesn't matter. You shouldn't, because you get $10,000 in your account, and because the margin to day trade the S&P is only 2,000 bucks, I find that no reason at all that you would be trading 5 contracts. You're way out of your league. You know, I actually, quite frankly, if you were to ask me, I would say probably 15 to 20 grand minimum for each S&P mini contract you wanted to trade. It gives you staying power. You won't sweat as much. And you know, you'll have the ability to withstand some losing trades and some losing trades in a row before it really hurts you. So you got to take that into consideration. What's your aversion to risk, which really is kind of hand in hand with the last topic. You know, are you highly risk sensitive? Are you just don't really care and you're going to, you know, lay everything down on that blackjack table on your next bet, you know? You got to take that into, if you're highly averse to risk, are you going to design a system on the Russell with a 5 or a 10-point stop? I don't think so. You're never mentally going to be able to trade it. And the mental part of it is the most important part. Unfortunately, nobody here this weekend is going to talk to you about it, but it is by far, at least in my opinion, the most critical part to trading, because you don't have to beat me, you don't have to beat Ron, Matt, you don't have to beat any of us. All you've got to do is beat the guy that's between your left and your right ear, and you'll be in good shape. So if you can control that part of it, you're going to be doing well. And finishing up on that topic is, again, in your system design, are you trying to gain a 25-point profit on every trade and looking at a 1-minute chart? Tough way to go, folks. You know, you've got to match up your time frames that you're using and trying to build the system on with the type of profits that you're expecting to get. If you're expecting to get just a few ticks, 3, 4, 5, 6 ticks, yeah, go ahead and use that minute chart. If you're expecting to get 10 points, not that you can't use a 1-minute chart, but I'll tell you, it makes it a lot tougher. And you know, so you got to kind of pick what's your average range, what's your average true range for that bar. Is it logical for the type of profits that you're trying to achieve with this system? If they're not, then you got to do a little bit of rethinking with that. And I hit on this already. You know, do you want a fully mechanical, semi-mechanical, or just test for ideas? And you can use this for any of the above. You can have a fully mechanical system. And we'll go through this whole process, and you can do it that way, or what I call semi-mechanical, which is, you know, you can use it simply for entries, and based on what I already said, made claim that there is no such thing as a single best stop. You can use things like that expansion tool that I drew on here. So if I get a long signal down here at this low, and I drew that expansion tool up there, and you know, it hit my target up there, why am I not going to take my profit if it's someplace close to what my target would have been anyway? You know, it gives me a logical point as opposed to letting the market come back in whatever way, shape, or form that I've designed my stop to be. Why do I want to give that profit up if I know that based on this other tool and my experience with this tool, it's a highly accurate tool. The way I use it is very consistent. So why wouldn't I want to take my profit at that point in time? Many times I do. So you don't have to use these totally mechanically. And I already hit this. Do you know what type of indicators work well for the type of system you're trying to trade? And I have a question down here, and it's, are you sure? You know, You don't have to know. I've done this, again, I mentioned earlier, I opened my first account in 1980, and over many years, you know, as things came out, and you know, really, again, it was really the pioneering times for all the computer-aided trading and software. You know, people were coming out with new indicators, and people were just putting them on the indicators, and I really got my background on a lot of the indicators by actually putting them, I used spreadsheets back in the time, because there was actually a time when there really wasn't such a thing as trading software. CompuTrack was one of the first, and so, you know, you didn't have trading software, but they did have like VisiCalc and, you know, some of those early spreadsheets, and you know, if you were able to use a spreadsheet, you could do these things and put these formulas in, and that's really what ultimately helped me with my understanding of many of the indicators. But ultimately, over the last 25 years or so, you know, if some guy would write an article in Stocks and Commodities magazine or whatever, you know, you could read it, you could play with it, you know, take a look at it, see if it was of value to you or not, and you know, it's just been a cumulative experience over many years of time. So I don't tell you, and I won't ever tell you, you need to know everything about every indicator. But if you're going to focus on, and you know, this program's got 100 or more indicators. I don't know, I've never counted them, but it's quite a list. You don't have to know everything about every indicator, but I probably use 10 to 15, and I really don't even think it's that many. But I guarantee you, I've played with them. You know, I've messed around with them to see if they appeared to be of value to me, if they made sense to me. They might make sense to me and not to you at all. So I'd encourage you to play with them, experiment with them, to get some familiarity with them. But also, I'm going to tell you that it won't hurt you to understand the basis of the formulas and how that indicator is calculated either. And again, not that you need to have a PhD in math and study, you know, every night what does this and what does that. But if there are going to be a few indicators that you choose that you like, it might not hurt you to have a more in-depth knowledge of those indicators. And my next point kind of feeds on that, which is something I talked about earlier with the oscillators. You know, I say, have you spent ample time with the interpretation of the indicators? And again, you know, you got to understand that on a normalized oscillator, if you're above the 50, that's basically a bullish signal. If you're below the 50, it's a bearish signal. So, you know, do you understand those finer nuances of the indicators that you're using to be able to use them effectively to your benefit? Went over the next point. Okay, all right, that's good. Okay, so without further ado, right up here, at the very top, traffic signal. Okay, that is your system test box icon. If you click on that, you get this box. And for those of you with the new program, you'll have these first few systems at the top, and you won't have all this list. And then you'll have Trend Finder, that would be under T's. You'll have Trend Finder next and Trend Finder highest, and all this other stuff you won't have in there. So I'll quickly go over this box. Basically, if you wanted to put a system on this, and I don't even what this is an ES chart, so let me at least pick an ES system. And this doesn't work with this. I write them for specific time frames, but I'll just throw this up here real quick. It's a 9-minute system I had, just no good. But you basically just click on the system, and then you right-click and say Use, and that puts it up on your chart for you. Let me go over this edit box, or this box, very quickly. If you wanted to create a new system, well, let me get rid of this. You'd come out here in the open area, right-click, that brings up this menu. If you want to start from scratch, say New, you click on that. We'll get there in a minute. If you want to edit a system, you highlight that system here in this list, and you click on Edit. That'll bring up the same box as New, except that you already have an existing system. If you want to send, I don't know, send your buddy in Texas a system, you click on Export, and that will export it to a directory under FibTrader, and you send it off in an email to him. If he gets it down there in Texas and he wants to put that on his system, he's going to select the import button. And there is no software to download or anything. It's just a quick little file. It just, you hit export and it exports, and I send it off to him as an attachment, and then he just clicks on it and it throws it right into his list here. And one caveat of that is when you import a system of someone else's, it will not immediately show up in this box. What you'll have to do is exit this box and then come back into it. Boy, that actually looked like a pretty good trade on that, didn't it? You got to come back into it, and then you will see it here in this list. So just keep that in mind, because some people say, well, geez, I put it in, I imported, but I don't see it. That's why. You've got to exit and come back in. So anyway, if you click delete, be careful. That deletes it from the system, period. It's gone. Forget it. Bye-bye. So, be careful when you hit delete in this program. So that deletes the system off of your system. It is gone. Bye-bye. Never see it again. Description. I'll show you when we get into the thing. There's a description box, which, you can write whatever text you want. I personally have used it probably less than a handful of times. I don't really personally find any real value in it because I can look at the indicators and pretty much understand what I was trying to do with that system. So you can put a description on it if you want, and I'll show you that when we get into it. So that's what that is. And then use, and that's how you select the system and then say use, and that puts it on your chart for you. The rest of these boxes down here, I'm not going to go into at all. Bill, we're asking about that, but that is where you would go to do scans. Use this. You would select a system. You'd go and select a system and say scan. That takes you to another dialog box with your symbols and stuff, and you select which symbols you want it to run on, and then it comes up and gives you a report whether it's long, short, neutral, out, flat, whatever. And you can see down here, scan TC2000 list. You will not see that if you don't have TC2000 loaded on your machine. So that should tell you I have TC2000 loaded on my machine. Okay, and it is a kind of a neat little thing because the little what do they call them in TC2000? Nobody here uses TC2000. Your directories or whatever I forget what they call it. Watch lists, yeah. So you can have your own little watch list and name it however you want, and then you can just scan that particular watch list, with that. So, but that's the extent of that. Don't ask me any questions. I don't use that feature, so I know next to nothing about it. Okay, so and you can also get there that same dialog box just by clicking this button as well. Once again, two different ways to do the same thing. So let's go. Okay. Just a menu up here. Okay, let's create a new system. Let me delete this one. Oh, if you right-click on this system name, it will give you this dialog box. You can click on Edit to go into the Edit dialog box to edit this particular system. You can say Delete, which will delete this system from this chart. Not from your system, but from this chart. So that's fine, except in one reason. But you can also click on here to get results. We're going to go into all of these later. The delete button, just be careful with it. I've begged Carlos any number of times now, because when I'm initially coming up with a system and I'm changing indicators and I'm going to the edit box all the time and changing this and changing that and putting this in, putting that in, I finally get it to kind of where something's looking pretty good and usable, and I come down here and just by accident I come down a little bit too far and click delete, and it's like, oh, jeez, it's gone. See ya. Bye-bye.
There's no are you sure?
There is no are you sure, and I wish there was. So you click that delete, and that system is gone. Well, now, had I had it previously saved, I'm okay. But if I didn't previously save it, because I'm sitting here editing and changing and working on it right now, and I didn't save it, see ya. So be aware. Be aware. Let's, boy, this looks pretty good. I maybe ought to use this one, huh? Okay. Okay. Maybe you ought to use that. Oh, here's one other thing. If you can see it, you might have a hard time seeing it from the back. I came up with my own naming convention. It's, you don't have to use it, but just as a suggestion, you're going to have 3 different time frames on your charts when you create your charts. So, typically it would be ideal if you could design a system on one time frame that worked on every time frame. I'm still looking for that holy grail, okay? Typically doesn't work that way. So I basically I have the symbol ES, and I say 9/27/81, which is the time frames that I designed that system for, okay? So sometime at some later date, because as you could see, I had a whole list of systems, and there are times when I'll stop trading systems and maybe look for something else that maybe is working, because systems will fail. Systems will go into drawdowns, and we'll get into this later, but I may pull up another system to trade if I find something that's working better, or working at the time when something else is not. But, in balance step 2, so I probably have a balance step, and I said balance step 2 here, or I'm long, no, sorry, that's the number of contracts that I'm long as 2. So the name actually is ES 9/27/81 balance step, and this number here will tell you whether you're long, short, or out. So if you're out, it'll have a 0 there. If you're long, it'll have long by whatever number of contracts that you've selected. Or if you're short, it'll give you a minus number of contracts that you have selected in the system. Okay? This thing's going to kill me. So that's what that's telling you, is you're long 2 contracts. And again, you can tell by just clicking on this tab, and it tells you system ES 9/27/81 balance step buy 2 stop order. Now flat. System buy 2 at 12/41/50, now long 2. Okay? So basically what happened here is this is a bit of a rarity because of this gap. Okay? Because not only did we gap up, but we gapped up above the balance step. So not only was it a gap, but it gapped up in the opposite direction. So not only did it stop out my short, but it also went long, which normally you would just be getting this, where it says, okay, sell 4. And obviously I can tell you this system I have set up to be long or short 2 contracts. Otherwise it wouldn't be telling me it would be telling me 2 there. So I obviously have it set up to trade 4 contracts, or 2 contracts, excuse me. So I'm long 2, and it's reversing my position and getting me short 2. So I had to sell 4. Okay? Everybody hopefully follows that. Okay. All right, now there was a system that I wanted to work with in particular. Let me delete, or just change that. 45, 345, where is it? And I bet you, how many of you want to bet that I can actually find it? Okay, euro, no, that's not what we want. 135. That's not it. What the heck is that? Oops. Okay. Oh, it was a Russell contract. It wasn't an S&P. That's what it was. Okay. Okay. Now we're back on track. Should be this one. 45 daily. Yeah. Okay. Now, this is, I was just playing with this. This is not a real system. I do not trade this system. Okay? But this will give you an idea of what we're going to do here. Let me just change a few things. Okay, don't pay any attention to what I'm doing right now. You don't see anything.
Don't mind the man behind the
You see nothing. Okay. You see nothing. All right. How can I best do this? All right. You got a pen? Throw me a pen real quick. Okay. All right. Okay. Okay. So when you come along and I'm going to go backwards just for one moment here. If you click on your box and you're creating a system for the very first time, you're going to right-click out here and say New, okay? And you're going to come up with this dialog box, all right? But I'm going to take one step past there. So everybody follow that, right? This is when you're going to start at the very beginning and start entering your very first system. I'm going to take you one step past this, though, and just open up this system. And so what you're going to do, you can also just left-click one time, and that will bring you to the Edit Dialog box as well. Okay, so you can do that two ways. You just left-click on the name, or you right-click and get this Edit Dialog. Same place, same place. Okay, so you pick your indicator. Fast point switch. Fast point switch is basically a reversal type of, I'm going to define the parameters here. It's a reversal type of an indicator, a stop and reverse type indicator. Hopefully you're familiar with those. You know, parabolic is one of the early ones that was out there and popular for many years, you know, where you're going up and a stop gets closer and closer, and as soon as you turn around, it reverses your position, you come down, and as the further you move, the parabolic will get closer and closer, and it's a continually stops you out and reverses you in the next direction, okay? So that's what the fast point switch is. It's a stop and reverse type of an indicator. Now, I'm going to go over these boxes. And I hate to do this, but you got to understand this. I will also tell you in the back of my section, the part of the manual that's a little bit hard to find, which actually Carlos did a pretty nice job of writing up, is in the back of your manual and in the very back of my section. You don't have to go there now, but the write-up is there, but it's also on the web. So I gave it to you quickly and easily. So basically, what you're going to do is you're going to come down here and you're going to say, I'm going to use a fast point switch, okay? So I'm going to come down here, and this is just like your indicators menu. It should look familiar. So you're going to come back down here to the F's to fast point switch, and you're going to click on Add, like I already have, and it comes up into here, all right? Now, we're going to have a fast point switch here. And you can even see it says stop and reverse right there. If you look at these, the first thing you're also going to want to do is name your system. So you want to name this system and say save as new, since we're designing this theoretically from scratch, right? So now you say save as new, all right? And let's pretend for a moment, actually let's not pretend. Let's pretend I saved as new, and now what I'm going to do is I'm going to go ahead and go back up into this box and put this system on to my chart, okay? Like I showed you previously. All right, and if you make changes to this system, you're going to then say save as default, and that is the default system under this name, okay? So any changes that you make, you could say save as new if it was drastically different, but then you'd basically have a system that you really didn't want, and then the system that was, you know, newer, and if you didn't change the name, then you got a little bit of a problem. Because you got two systems with the same name, which you can do. And then you're really confused. Okay, which one is which? So basically you just say save as default, and that makes any current changes that you made to your system to your default system. All right, so let's go over these boxes fairly quickly. You have a pull down here, and I'm going to throw in a moving average just so you can see that there are other choices here. Since the stop and whatever the fast point switch is only a stop and reverse. Remember when I was looking at the alarming results on the indicators? Here's a moving average. I've highlighted the moving average, so now these boxes apply to the moving average. Close past line, bar crossing line, change of slope direction, step direction, okay? So you get each different indicator, and all of the indicators don't necessarily work in here. 100%, some of them do not, because you just can't really do anything with some of the indicators out there other than visually look at them and subjectively trade them. So you can't use 100% of the indicators, but you can do just fine here. So anyway, depending on what indicator you indicators, but you can do just fine here. So anyway, depending on what indicator you select, we'll give you a choice of menu options here to select from, okay? Now, anything you put here in this box is a trigger. You like that? Anything you put in this box is a trigger. So if you put 5 indicators in here, it's a trigger. Everybody get that? It's a trigger. Repeat with me. Everything in there is now a trigger. And we had a hard time discussing this in Florida. Okay, so I'm going to say select this fast point switch. Now, let's go over here. What if I wanted that fast point switch indicator, instead of being a trigger, what if I wanted it to be a trend indicator? Actually, you know what, tell you what, let's just use the moving average, since most people are used to moving averages being a trend indicator. So here's my moving average. I have it highlighted. So now I'm going to say when it closes past the line, I want it to use it as a trend indicator. So now this moving average is no longer what? A trigger. It is now it determines direction. All right? It's using that moving average as something to determine trend, up or down. So that means if you're above the moving average, it's only going to look at long trades. If you're below the moving average, since it's being used as a trend indicator, it's only going to be looking at short trades if you're below. Everybody got that? Yeah? No? Okay. Key. We had a real problem discussing that in Florida. And if you just want to use it as a trigger, you just take that off, okay? You can do that with any of your indicators. I could say fast point switch. I want to use that as a trend indicator. So now my moving average is my trigger, okay? Because I unchecked it from the moving average, but checked it on the fast point switch. All right, so let's get rid of that. All right, now, going on to the next thing. Say you're designing a system for your IRA. Well, you want to trade long positions because that's all you can trade, but you can design a system that only takes short trades. You can design a system that only takes advantage of a down market. Say, I don't want to take long trades on this system because the market's down. So, because once again, it's kind of hard to design, well, there's different philosophies or thoughts on this, but you could theoretically design systems for uptrends that only take long positions, and you could design another set of systems for for downtrends that are only going to take short trades, which you would use these next 2 boxes for, okay? So that's what those are for. And I have on occasion done that, and it actually works fairly well if you want to investigate that. The invert trades button. This is a tricky one. How many people have ever seen a system that have ever messed with this, have seen an equity curve that goes down from the beginning to the end with a nice 45-degree angle, and you just say, well, gee, if I just invert the trades, it should be a great thing. You know, it doesn't work that way. It typically doesn't work that way. It's just probably because it was simply a bad thought. So just scratch it and move on to the next idea that you have. But really, if you think about it, what that's going to do for you on invert trades is, say, for instance, keeping it simple, I've got the moving average up there. Typically, you're going to go long when you're above the moving average. You're going to go short when you're below the moving average, right? Right? Okay, good, good. Some of you are still awake. That's good. If you said invert trades, what it would do is now when you go up above the moving average, you're going to go short. When you go down below the moving average, you're going to go long. Do you really want a system like that? I don't know. I don't. So be careful with that. I mean, ultimately, it's, you know, I don't know of many people that design a system that I'm afraid to take a question, but go ahead. I don't know of many people that want to design a system that trades backwards. Although I'm going to contradict myself here in just a little bit. Go ahead.
My only question is there a way to set up the trends so if the moving average slope is up, the trend is
Yeah.
up?
Yeah. That comes back to your choices over here, which is you would come down here and say, change the slope direction. Okay? So now it's not going to go on whether the closing price is above or below the moving average. It's going to go on whether the change of the slope direction has changed. So if the slope of the moving average is up, it'll be taking long trades. Slope of the moving average is down, it'll be taking short trades. Okay? And you can do the same thing with the steps. And personally, I like the steps. I prefer the steps better. Because what the steps will do is also help you eliminate some real close whipsaw trades that you'll still have with the change of slope direction. Because believe me, it says change of slope direction. Any tiny little, tiny little mathematical change of slope direction, guess what happens? You get a reversal. So for that scenario, I prefer the step direction. Okay, but let's go ahead and just be normal here. Okay, so inverted trades. Okay, now down here, this is when these triggers are going to take effect. Are they going to take effect at the bar's close? Are they going to do it at the next bar's open? You can use either of them. You will see differences in them depending on your system. You know, whether you're a daily system, for instance, and maybe going to you get a signal at the end of the day and you're going to go long or short at the open of the next day. Well, guess what? You know, especially on a daily where you got gaps on the open, you know, your difference could be quite a bit different than what the close of the previous day was. On, you know, a shorter time frame, it's not going to really make a whole heck of a lot of difference, because usually on a, you know, a 3-minute bar or something like that, there's not a heck of a lot of difference between your, other than at the open, you know, there's not a lot of difference between your open and close. So you will see some differences. But typically it won't be, you know, a big deal either way. I'm under the belief you can use either of them. And here's where we come back to trade at nearest indicator's value. Did I already mention that never use that? Because you can create, I promise you, I have a system on here. I just noticed it the other day. I still have it on here. I called it Superman. A friend of ours and I were working on this, and it was incredible. It was absolutely incredible. It was so good. I knew it couldn't be true. And I watched it for a week, and just trade after trade was just winner after winner. And I was like, I got to start trading this. And when I started trading it in real time, I suddenly realized what was happening. Again, in hindsight, the system knew where the open, high, low, and close were. So it could say, yeah, you had a trade here, you had a long trade here, you had a short trade here. And since it's saying at the indicator's nearest value, it was, man, as soon as it crossed that indicator, it was you giving your long, giving your short. So boy, you just made the maximum amount of profit that you could possibly theoretically make. When in fact, in real time, I started seeing, go long, you're out, go long, you're out, go long, you're out, go. It's like, whoa, wait a minute. Yeah, I've been long and out on the same 1-minute bar 15 times here. What's going on? And I finally realized what was happening. So never use it, okay? But believe me, you can make one pretty looking equity curve and one pretty system in back testing. It will be beautiful. Okay, this box right here. All trend indicators must be in the same direction. Okay, if you have multiple trend indicators, so you're using a long-term oscillator like I showed you earlier, and a moving average as a trend indicator, or you're using a trend indicator on a lower time frame and a trend indicator on an extra higher time frame, you can say only when all trend indicators are in the same direction, take a long or take a short. So if you say for instance you had 3 trend indicators, 2 of them were pointing to the long side, 1 was still pointing to the short side, you're not getting any trades until that 3rd trend indicator is also pointing to the upside. Okay? Next box. Trend indicators must already be in the right direction. They're very similar but very different. This is saying I'm not looking for something that's just turning right now. I'm saying those 3 trend indicators better had already be in the upside before I'm going to take a long position. Okay? So it's not oh, it just switched. It's saying, you know, it's got to already be there. Okay?
Does that mean just for 1 bar?
For 1 bar.
One period.
What do you mean?
Well, the trend indicator starts to move.
Yeah.
Changes direction, starts to move. Does that mean it's just moved 1 bar?
Well, whenever it fits the criteria. Whenever. See, really the top box is more of, let's suppose you're in a sustained, that 40-point move I was talking about earlier. And you've got a system that will take your first 10 points, maybe get you out on a pullback, and then get you back in. Okay? Well, those trend indicators are in the same direction And well, in this case, they're probably already in the right direction because you just made some minuscule pullback, right? So the trend indicators are already in the right direction. The one above it where it must be in the same direction, if you had, say, a real short time frame indicator and trend indicator, and it started to move down in that little pullback, it's not going to give you a long till that last third indicator starts turning back up. So they're very similar, but yet they are different. And I use those two boxes a fair amount, actually. Use trend indicators on entries only. Okay, keeping it simple again, moving average. So if you have a moving average, what do? You buy long, you go above, you go short when you go below. Well, in this case, say for instance I had a moving average and well, as I said, use the fast point switch as a trend indicator, okay? Well, actually that's a bad example. Well, really, it is what it says. Don't exit because it violated this trend indicator. Yeah, you would have something else to get you out, is ultimately what you're doing with this one. So if you had a trend indicator and it allowed, okay, say for instance your last of your trend indicators started pointing up and you're going to take and you get your long trade, okay? And now you get, say, a very short period moving average that on some little pullback starts to turn back down. This is saying don't use that for an exit. So just stay with it, okay? What else? Allow contra-trend trades. This is where you're going to set up how many contracts you're going to trade. So if you're a stock trader, you might want to put in 100 here. Or if you've got the big bucks, you put in 1,000 here. Or bigger bucks, you put in 10,000 here. So you can use however many shares. Personally, I still usually leave it at 1, and it's just for one reason. I want to know what the lowest common denominator is. Did you not catch any of this, is what you're telling me? Oh boy, don't ask me to repeat everything again. Okay, good. Good. So anyway, where was I? Oh, so this is where you set up the number of contracts. I want to know what the least common denominator is. I want to know, if I can make money on this system. You're going to see no more than 2, 3, boy, the absolute most 4 things up there. Keep your systems simple. It's like Dennis was showing you all those charts with all those lines and circles and things on there. I can guarantee you the more indicators you put in here, the more you are curve fitting your data. And I can probably take out all the little drawdowns in many of my systems by adding some more indicators, one to do this and one to do that. All you're doing is curve fitting. All you're doing is look to shoot yourself in the head. Don't do it. So keep it simple. I remember way back when I was doing things by hand and with a handheld calculator, to calculate moving averages and things like that. And you had to keep it simple because everything you had was simple tools. And then computers came out and you started putting all kind of indicators on there and this and that. And ultimately I went full circle. I went from having these very simple things because I was doing it by hand to having these great computer tools with all these wonderful indicators available. And next thing I had this conglomeration of mess, and I've gone back to keep it simple. It's truly the best. Just keep it simple. So anyway, if you had multiple entries, and I rarely have need or use for this, really, it will allow multiple entries as your system is going along. No flat positions. Use only stop profit protection. This is to some degree for systems that will stop you out. Well, basically it's telling you, use only stop protection. So say for instance it got you out because of again, keeping it simple, a moving average crossover. Well, this is saying no, don't get me out because I crossed over my moving average. Say I went long because I closed above it, and then I had one little tick where it closed below it, which would typically get you out. If I had this checked, it's saying no, don't get me out. Stay in until I either hit my stop or I hit my profit target, one or the other. So I want to stay with that trade. So that's what that one does for you. That one can be of some use to you sometime. And then here you can say add positions on re-entries and how many contracts you want to enter if you check that box. I never do that. So you might want to. I never do. And then here, show trades on the chart. It's going to put the arrows on the chart where the trades occur. Alarm on condition. This will by default not light up, but you want to do that because it'll, depending on how you have your alarm set up, which is under global settings, and I can show you that, but it's not that big a deal. One type of list gives you a history of the trades, and another type just gives you the current trade, which is what I have set up for the current one. But this basically, just gives you the last trade, and it alarms on the last bar only. So you want to check that. This one, the indicators that you have in here, if you're working on this thing, it's advantageous to check that box. Say show indicator names, because now if you notice up here, there is no indicator names. It's only the name of the system on there, right? Well, now that I have this box down here checked, I can say close, and now the indicator names that I have in the system are here. So if I'm just editing one or the other of the indicators, I can just simply click right there, and that takes me to the edit dialog box for that particular indicator. So it saves some time as opposed to going over to here, opening this box, then double click in here, then, okay? So it just saves a little bit of time. All right, so we'll go ahead and leave that there. Options. Here's where your stop, your profit protect, your arrows, your security is. So your stops. Excuse me. Your stops, you can have none. You can have by percent of value. Theoretically, I like percent of value, and you would put that value in here. The only problem with it is say you're trading the S&Ps, you're trading the Russell. You think that, okay, well, wait, if I want some, if I want to only go 1%, or if I want to go 2% of whatever my pullback is and then stop me out, that's great, except in real-time trading, you now got to sit there and break out your calculator and determine, okay, where was the high, how much of a percent is this, what the value is today versus what was the value a month or 2 months ago. It makes it hard to kind of figure out, although the program will show it on there for you. I don't like it. I prefer use by ticks. You can put in a set number of ticks, and you can notice both of these. If you click on them, it adds this box if you want to make it a trailing stop, okay? So ticks is straightforward. You put in however many ticks you're going to use, trailing or not, trailing or fixed. Average range of 5 periods, 3 periods, 100% of that range, 200% of that range, 1.618% of that range, whatever you want. And if it's a long, from the entry point or from the high or the low. So if it was a long, it would be from the low, or if it was a short, it would be from the high. So, depending on what you wanted, you could select any of those parameters. Previous high-low of the last 5 periods, the last 8 periods, the last 50 periods, whatever you wanted, and again, whether it be trailing or not trailing. So these are just the various things you can check for the stops. Close all positions at the end of the day for you guys that don't like to carry contracts overnight. So you can close it out, so even if you didn't get a signal or whatever, the system, the program closes your trades out at the end of the day. And of course, if you wanted to just go right back in first thing in the morning, if you were still long or still short, then you can just click this box and it will give you the trade, it'll re-enter your trade, whatever it was.
The close at the end of the day, what time is it, does it do it at 14:59 or what?
No, it doesn't. It's something you need to be aware of if you got that box checked. He asked what time of day, what time does it do that, the close of the day. It's something you have to be aware of because you have the contract set up to set a certain period of, a certain time frame, right? The S&P, the Russell, from 9:30 in the morning till 4:15 in the afternoon. Well, the program knows that, but the system doesn't really know that, okay, this is my closing bar, and it's not taking into account that you can't make a trade after the bar is closed. So if you have that box checked and that's the system that you've designed, you need to know that, okay, it's in fact going to give me a signal at the close of the bar, at the close of the day. Unfortunately, the market is now closed, and guess what? I can't close my trade out. So you've got to take the initiative to go ahead and close your trade out at the end of the day. Okay?
So how is checking this off? Is this just a...
It'll change the equity curve. It'll change the equity curve of your system.
Because it'll reflect the fact that it presumes you closed it out.
Yeah, this is not going to automatically trade for you. You're still going to have to pull the trigger. You're still going to have to place the orders. But it'll tell you, go long, go short, get out, close of the day. And again, if you got this checked, then you're going to want to know that it's going to give you, it's going to close you out at the end of the day because you've got that box checked, so close yourself out.
How does close the other day? 7 versus what's the last price? How does that work?
Whatever your chart is showing. So whatever your chart is showing as the last close of the day is what it's going to reflect. Okay, you know, and that brings up, John brings something else. Well, okay, since I'm thinking about it, and I might forget it later. When you're designing systems, this is operating off the last price. In real life, we have a bid and an offer. Well, guess what? In an ideal backtest world, you already know where the open, the high, the low, and the close were. So you could theoretically hit a point, say for instance, to sell a long position, to close out a long position, and to be honest, well, I'm not going to show it, it doesn't really matter. It happened to me on Wednesday, I believe it was. The high on the S&P was 1238. My target was 1237.75, and I got executed. And I was happy because it was my target. But we're talking one tick. And on that particular system, it does that frequently. But you've got to be aware that you might see a price at 1238, say, okay, I could have sold at 1238. If you were awful darn lucky, and you know it's happened to me on occasion, but you know, you got to realize that you're not selling at 1238. You're closing that long position out at 1237.75. But you know, any software does the same thing. I don't know of any package out there, including the big one, that uses, you know, because you're collecting open, high, low, and close. You're not collecting bid and offer, bid and asked. Okay, so keep that in mind.
Is there a way to test it for, you know, we're setting all these parameters in terms of use this for a stop, you know, so many ticks, whatever, to find the optimize it to get the right.
Yeah, you're getting way ahead of me, and I'm not going to answer that right now. I will get there. Okay, what's this say? Do not show stop arrows on screen. I don't know why you would ever check that. I want to see it. When it gives you when you actually have an active signal, it'll print a stop arrow with the price and a target arrow if you have one in there with the price. So I don't know why you would ever not want to see where that is. So anyway. The profit protect is basically, there's one other box which is the same on both. This is at the bar's close. So say for instance, I said 32 ticks and I said at the bar's close. Well, this profit protect would trigger once it got to my 32 ticks, but since I have at the bar's closed and it works the same on the stop, it's going to actually wait till that bar closes to execute that, close that trade out, okay? So, you know, it depends on your system. Sometimes it's helpful, sometimes it's not. You know, depends on your system. So, but that's there. But otherwise, these are basically the same. Percent of value, you put your value in by ticks, average range of, same thing, okay? And if you have this, it says retracement from high profit percent. If you check this box and you put some number in here, 10%, what that's saying now is I've got 32 ticks selected as my target, okay? 32 ticks, I don't know, what contract is this? Russell. So that's $3.20, okay? Right? Everybody still with me? So it's $3.20 is my profit target. Once I get to $3.20, if it comes back 10%, which amounts to what? 3 ticks, it will stop me out. Okay? You can see that's not very much. 3 ticks. Russell does 3 ticks in a blink of an eye. So typically, what this is really meant for is systems where you're going to have a much larger profit, say a 10 or 20 point profit. And now if it comes back 10%, You know, on a 20-point profit, you're talking 2 points. You're giving it a little bit breathing room, but allowing it to run if it continues to run. Quite often, to be honest with you, in my experience, I've used that very little. And the reason is if you put your stops in at good places, that's usually the best place to just get out of that trade. And you'd be amazed at the number of times I can get out very near, you know, turning points, and just because that's the way that market moves. So.
Or could that be used in this scenario type like that if you're going for a profit target instead of getting out?
I'd rather just go for the profit target. You can do what you want. I'd rather just go for the profit target and be done with it, if that was the case, because I'm designing this to be at a value that I can hit. But I don't want to, you're kind of getting ahead of me. And here, and I didn't go over this on the stop, but the same thing on the stop. Say, for instance, you keep it easy. You have 2 contracts. Say I only wanted to get out a half of my contracts. So I would type in 50% here, okay? And on this particular profit protect, it would only take 1 contract off, and the other contract would have to exit in another fashion, okay? Some other means would have to exit that other contract. So you can do things like that as well. And that's, if you're trading multiple lots, that's kind of a neat thing too. And then again, right down here, I don't know why you would not want to see your profit protect arrow on the screen. So that's, you know, I always have that on. Your arrows and paint bars. You notice how my bars are red for shorts and green for long. This is where you select that right here. You check this box. If you don't want that, you check that, and I think it'll go off. No, I guess I got to actually get out of there to do that. But you check those. I don't really check the going flat because I really don't care. It's just going to go back to my default bar color. And you can see the stop arrow if you want to change these colors, because I believe the stop arrow is actually magenta by default. It's a little bit dark for me to see. So uh-oh, boss is coming. So basically I changed that so I can see it. Yeah. Oh. Okay, a few minutes. Okay.
Can you go back one to the profit protection?
I don't want to. So this is the color that it's going to, it's the color of your arrow that it's going to go to. And here's your profit protector. And you can see I say show profit stop arrows. If you don't check this, it will not show them. So I check it here so it will show them. And your security, you can put a password. If you're going to send this to your buddy, you can put in a password, okay, so that he doesn't know how to get into your system or see what your system is. And the system expires date, that should be self-explanatory enough. And if you put in the serial number of the machine that it's going to run on, so if you're sending it to your buddy, you want to put in the serial number of the program of your buddy's machine. It will run on his machine and his machine only. So he couldn't pass it out to the rest of his friends and pass it all around, if you're interested or concerned about such a thing. Quickly, what do you want, Matt?
Okay, if you've got it on profit protection by ticks, value 32, and you don't have anything else checked, it doesn't hit 32, and your stop is just X ticks. If it doesn't hit 32 and it falls back down, then it's gonna go all the way down to the loss.
Or wherever it exits, depends on your system, yeah. Yeah, yeah, okay. So, I'm going to close this. I'm going to do this. Oh, let's do something here. I've been asked to hurry it up. Where's triple switch? Okay. Okay, so now, what did I have? High 15.3. Well, okay, let's do this first. Okay, so this is going to be my system. I think I inverted the trades, actually. I'm going to use this as a trend indicator. All right? And I'm going to say, do I have my stops in here? Okay, you're typically going to have no stops to begin with. So I'm going to close this out, and this is what it's going to give me. This is what it's going to look like, and I'm going to go here, right-click, and I'm going to say Results. Go here to Show. Here's what the equity curve looks like, which really isn't very good. And I go Show MFE, which is max favorable, and Show max adverse. And this is how you would start to decide where you wanted to put in a stop loss or profit protect. And I'm going to advance this thing by saying that, okay, right in here, if I click right here, oops, if I click right here, this box shows up and it tells me stop at 813. So that would be, on the Russell, that would be 81 ticks. And if you're looking at this blue line, I shouldn't have got into this. If you're looking at this blue line, this is the profit you would get if your stops were at these various points as you move across here, okay? So ideally, you're going to pick a point that's fairly close to the top because that's the most points, which is registered over here on the right scale. You can see minuses, you can see pluses. Hopefully yours has nothing but pluses. You can see along the bottom scale, since this is max adverse excursion, is the number of points that this trade went against you before it either turned out to be a losing trade, the red squares, or a winning trade, the green circles, okay? And along the left side is the number of points that you actually made on each and every individual trade. So on this trade here, it turned out to be a 10-point loser if I go over here, okay, right? 10-point loser roughly, and it was actually up about 11 points as I can see down here. So this trade was up about 11 points before it turned into a 10-point loser. It's not too good, huh? Okay, but that's how you tell, and that's how you would use this and get an idea of where to place your stops. The max favorable is the same thing with the exception that instead of points that it went against you across the bottom, this is the points that it went in favor of the trade before it finally closed green circle as a profit or red square as a stop, okay? And now you would use this figure to determine where I want to put my stops at, okay? So target, it says, of 5 points here. Now, what I'm going to do is really advance this and just show you, if I come back here, if I edit this, I'm going to show you where I got with this system. And I don't trade this system, but I just show you what I ended up coming up with. So I put my profit stop of 32 ticks. I put my stop of 50 ticks, excuse me, my stop loss at 50 ticks, my profit protect at 32 ticks. I say OK, and I say close. I see what that did to help me, if anything. And now I can once again look at the equity curve. Doesn't look like it did very much good for me. I can go back here, look at these things. And then I'm going to do one other thing, which is I'm going to change this back. And now I can change my indicators as well. And I really would change the indicators first and see how this affects my results. So I'm kind of doing this ultra fast. So this is what I kind of ended up with by changing that indicator value and having those particular stops, okay? And here's where my MFE, and you can see the blue line is now pretty much going up in a nice angle to the right. And if you're using a stop, you'll always see that this is basically the top because this is where you've got the stop, okay? And the same thing on the max adverse. You know, I might have used a little bit less here, but that's okay, that's where it is. Well, actually, I used this point, which is actually higher than this point. So this is actually a better point to have that stop. This is where you get your performance results right here. Do I need to wrap up? All right, can I go over this page very quickly?
Is there any way that we can continue this tomorrow morning? I'd be willing to come here 2 hours early to listen to you, but I mean, it's just a little late, and I want to get something to eat before 7 o'clock.
Okay.
I mean,
all right.
I am truly, truly interested in this.
I understand. No, it's okay.
The last hour has just been
It's okay.
way
Okay. Okay. I'll end it now. But if it's okay, can I just quickly go through this page? And then I'll call it quits, okay? All right. Your gross profit, that hopefully is self-explanatory. You had 323 points gross profit. Here's what you gave back, 223 points of it. So that's not all that great, although it is a profitable system with still ending up with 100 points. Now this profit factor, if you look in the book, I've given you my best guesses, or I shouldn't say best guesses. I've given you my experience worth of what these values should and could be and what they will be. But what I will tell you right here, right now, if the gross loss and the net profit are equal, suppose both of these numbers were 100, okay? Your profit factor would be 2.0, all right? I don't know what this calculation is. Carlos doesn't remember without going into the code, but it doesn't really matter. Your ideal is if you can get this above 2. This is a key number. You want this number to be as high as you can get it. So anything from say 1 1/4 to 150 might be okay, depending on your other numbers. Anything from 150 to 2 is probably okay, depending on your other numbers. Anything over 2 is usually a pretty good system, and believe me, it is not easy to get that number over 2, okay? So anyway, so your total, so this is key number 1. There's 4 key numbers here. Total trades should be self-evident. It's the total number of trades you made. Here's your winning trades, here's your losing trades. Here's your average points per trade. This is how many points you made based on all of this other stuff. So basically on a Russell, I'm going to give you, this is key number 2. Key number 2. Here's the quick and dirty way. If you average 0.51 points per trade, how much is a point worth on a Russell contract? $100. Okay? You multiply $100 times 0.51, what do you get? $51. You subtract your commissions. If you're IB, $5. You're now down at $46. You take on the Russell, at least 3 tick slippage probably, that's another $30. You're now down to $16. Do you want to trade a system that averages $16 profit per trade? Up to you. I don't think I do. Okay? But that's if this number isn't high enough to offset your commissions, is some small amount of slippage, you stand no chance. Next, or go back to the drawing board. Okay? That's key number 2. Again, percentage profitable. Here you can see it's actually pretty profitable, but it really doesn't make that much per trade to make it worth my while. So here's where you got a real high profit system, but guess what? You're going to be fighting to make a profit on this system, to trade it in real time. Okay, largest winning trade should be self-evident, and that's because that's where my stop is. Actually, my stop is at 32 ticks, so this was obviously on an opening gap somewhere. Same with the largest losing trade. That's where it's 50 cents greater than my stop, and again, opening gap, so it went past my stop on a gap, and that's where it took me out at 550. Average winning trade. You know, once again, that's your average winning trade and your average losing trade. You'd certainly like to see your average winning trade greater than your average losing trade. Here's your key number 3, your ratio of average wins to losses. You know, the old axiom is 2 to 1. I don't really agree with that because it depends on the type of system you got. If you've got a scalping type system like this is, it's going to be less than 2, I promise you. On the other hand, if you've got a trend following system, it darn well better be greater than 2. It better be 3 or 4 if it's a trend following system, if it's worth anything, because you know, you want to be making a lot of money on those trend trades versus the whipsaw trades that you get stopped out on a trend system. So that's key number 3. Average trade, it depends on the type of system. I don't really find great value to this. It's just there. Max winners and profit, I look at it, it's nice. I don't really care. I really focus on key numbers 4, max consecutive losses and consecutive drawdown. You know, 4 trades at 20 points for me isn't that bad. For you, you may not be able to stand that. you may not be able to take 20 points. Because remember, if you're trading one contract, 20 points on the Russell, it's $2,000. So you've got one period that you know that had 4 losing trades in a row, and on a single contract you lost $2,000. So if you're trading a $4,000 account, this might not be such a great system for you. So that's key number 4. I want to know what my drawdowns are. So I'm going to call it quits for now. I know everybody's tired. My voice is going. And any quick questions before we wrap it up?
We're going to start sharply at 7. Yeah.
No questions? Thank you. Okay. So we were just playing with some things, and you know, I just had to laugh. Too bad I didn't have this on my Russell chart for the last few years. This is a Russell chart. This is just something, if you were interested in doing some swings, you might take a look at. I have a 135 daily weekly chart here. The solid magenta and solid blue lines are coming from the triple switch high default values. The dashed, and I'll zoom back out, the dashed magenta and blue are coming from the dynamic trio next, which would be on the daily, and to go even further in, the red and the green would be coming from the fast point switch. So it's something you might take a look at, and I just threw this up here in the last 15 minutes, so I can't say I've used it or traded it or anything else, but it did look interesting just from the perspective of taking an eyeball view of it. Those would have been some nice runs on the Russell to catch if you could have caught those somehow. So anyway, let's get back to what I was talking about.
Harry, when you were doing the systems yesterday,
Yeah.
I was wondering about, is there a way to set it to take a profit target?
Yeah. The profit stops. Yeah. Here, let me bring something up here. Let's see. 345. What is it on this one? I think it's this one. Okay, I actually have 2 systems on this chart, but I'll just, we don't really care about the signals or anything, but if you went in, oh, hang on. If you go into Profit Protect, that's your targets right there. So whatever you're setting here is, as you say, for instance, are in a long position, in this case going up by 99 ticks, and this is what a Russell chart. So, you know, that's $9.90 target. So in this case, once you go up 99 ticks, you're going to be taken out.
Okay, so that would fill in like a limit order and presume that, you know, it gets filled with that limit price, 99 ticks.
Yes. Well, I mean, there's no auto execution or anything here. I mean, I would be ordering those. But yes, if you were, well, as a matter of fact, you can see up here on the screen, there's a white 675.80 and a cyan 690.60 up there at the top. That is, I'm not sure what system that's being generated from. Actually, it's being generated from the Magic system, okay? Because you can see up here in the upper left-hand corner where it has a 1 out there. So that's telling me that's long. So right now, what it's saying is my stop right now is at 675.80, and my profit target is at 690.60. So it will plot the, once you have an actual live signal, as you can see, it just got me long here, and it looks like it's pretty flat. But in any case, it's got a, this is where my stop is going to be. Well, that's not where it's going to be. That is where it is. And that's where the profit objective is. So it'll plot those arrows and plot those numbers as long as you have this box checked right here. show stop and profit arrow values. So otherwise, it won't show you the values, but it will show you the arrows, as long as, like I was saying yesterday, if you end up checking this where it says do not show profit protect arrow, then these arrows will not appear either. Okay, that's why I was saying yesterday, and it's both same on the stop and on the, where is it? It's down here on the stop. So you have it both. You can get rid of those arrows if you want, but again, I don't see any reason why you would want to, personally. So, but the catch here is you have to check. This box typically is not checked by default, so you do have to come in and check that to actually see the values. And you know, I find it of value to see the values, because you know, I see that arrow up there, but I don't really know what the price is. So with the values, and I know exactly what the price is, and then you could then at that stage in the game just go ahead and put in your limit orders, put in your stop and put in your limit, and as soon as you get there, and it's going to go. So
Now, in that same profit protection thing, it was interesting that apparently from yesterday you can set it so to fill in the retracement thing. So if you did that, it would be like you kind of created now a trailing stop, is for all intents and purposes. If it hits 99 plus 99, and you
yes. Yeah, I suppose that's reasonable and fair to look at it that way. I wouldn't really call it that, simply because if you start talking trailing stops, really you're talking about a stop that's over here on this page, because this is where you would set up a trailing stop, is right here. So hang on, I know what you're getting at, I'm pretty sure. So you know, this would actually be a trailing stop, but in essence, what you are saying is correct. So if I check this box here and I said 10%, for instance, 10% of, well, let's just call it 10 points, that would be a point. So, you know, once this hit it has to hit that target value first of 990, and then once it hits that, if it continues to run right up to 20 points, then I'm still in that trade. And if it retraces any little bit, because 1 point on the Russell certainly isn't that much, you know, it can do that in a blink of an eye, then it will stop you out there with less than a 990. Say it comes up, hits 990, and then it immediately goes down to 890. You're going to be out at 890 as opposed to 990. Now, the other thing you can do, okay, is if you say had just increased by 1 to 2 contracts, and then you can just go ahead and say, just get me out of 50%. Okay, so you can forget about this box and forget about doing this thing, or you could do that, but you could also just say, once you get to that 990 value, take me out of half of my position. Or, you know, if you were trading 4 contracts, you know, whatever. So you could put some percentage here. Now this will only take you out of 1 of the 2 contracts, but now here's where your issue is. You're going to have to manage that last one. Because the only thing here now in this, unfortunately, you only have a choice of 1 stop and or 1 profit protect. What would end up taking you out of this trade, the second contract on this particular system, is whatever your trigger is, would be, you know, trigger, say for instance it's a moving average.
a reversal.
Yes. So, you know.
Why did it forget about the stop that you said? In other words, I was kind of presuming that.
Oh, the stop will still be in effect.
Oh, okay.
The stop will still be in effect.
So you'll just let it run, or that, you know, that stop moves up anyway?
Well, not in this case.
Oh, well.
No, this is a fixed stop. That's a fixed stop. I do not have the trailing box checked. If I check the trailing box, then yes, the stop would continue to move up, and then yes, as you hit your profit target of 99, got out of 1 of your contracts here, then as long as you had a trailing stop here and it continued to follow up, then that would take out your next contract. So yeah, that is a way you could do that. I mean, there's a lot of ways to do things, but it would just as easily, you know, come down and give you a reversal on your trigger, okay, which would also take you out of that. All right. So in this system, I think actually this system is pretty much what I showed you yesterday on the moving average on the Blau. That's what this system is. I don't actually trade this system, but that's basically what this thing is. This was something I did in Orlando for a few friends of mine, and it was just one of those things that we were playing around afterwards. Somebody of mine was asking me, well, you know, can you do this? And I said, well, yeah, here, let's take a look. And, you know, I came up with this, and it was kind of interesting, and it looked decent, so I just kept it, but I don't trade it because my other system is better. So let's see, okay. But let's go over to here, because I didn't get to spend a lot of time on this, and this is actually fairly important. If you go over here to the results page and you say show, oh, here's something very, this is a pretty neat thing, and I didn't mention this yesterday. You can just highlight that thing, just like hitting that button right, the very corner button here, and now you can do a Control-C on your keyboard, which will copy it to your Windows clipboard, and now you can just paste that right into Excel. So when you go into Excel, you put it down, and you put your pointer down, you say paste, and it'll paste all this in here, and now you have all of your test results and your MAEs and profit and loss and MFEs and all that stuff, and you've got the full power of Excel to do whatever it is you want. I used to, and I can't say that I do it anymore, but what I used to do is I had a spreadsheet that I would put this into. I've done with a number of them, but one spreadsheet that I did was I would calculate with varying amounts of slippage and or commissions. You know, the commissions are pretty well a fixed thing, but the slippage is, of course, depending on what contract you're trading. You know, an E-mini on the S&P, you know, take a tick, either entry and exit, and I think you're pretty well covered in most cases. The Russell, on the other hand, I'll tell you, I wouldn't hesitate to give it 5 ticks. Because, I mean, any of you that trade this, it moves. And if you happen to just be getting in or getting out at the moment that it's starting to jump, 5 ticks is nothing. So, but anyway, I built a spreadsheet that I could change how much slippage, and I would just vary the thing and then plot an equity curve out, because the equity curve, I guarantee you, as you change and increase the amount of slippage, because keep in mind, this program does not account for slippage and or commissions. So, you know, as I throw commissions and slippage in here, believe me, this equity curve will change. And, you know, and I would just vary it up, and, you know, it was sort of a test, and I would basically take it down to either negative or to flat just to see how far, you know, just as a for instance, and I'll just throw some made up numbers out. You know, if I could go to, for instance, and I did this once on an S&P system I had, that's why I'll give you these numbers, but I actually could go to a 4-point slippage on it and still be basically at break even, having made all the trades just the way they were, just a regular commission, but up to 4-point slippage on each trade, which again on an E-mini is pretty ridiculous. You're never going to get 4-point slippage on an E-mini contract, but nevertheless, I was very happy with that, because it was like, geez, there's no way I'm going to take a 4-point slippage on an E-mini contract, but if I did, I would still end up breaking even trading this system with it. So, you know, you can get that kind of an idea, but you can do anything else that you want with this thing in Excel, and, you know, Excel offers, of course, a lot of power. The other thing I didn't mention yesterday on the equity curve itself is, here, let me blow this up. These are 2 moving averages which are fixed. They cannot be changed, but there is you probably can't really tell the colors back there, but it's a black line and a blue line. The black line is a 10-period moving average of the equity curve. The blue line is a 20-period moving average of the equity curve. Now, as you can see, we're pretty well above the equity, the moving averages consistently all the way up. However, you know, I don't see where Matt is, but anyway, I actually wasn't this system anyway, so it doesn't matter. But, you know, I gave a buddy of mine, somebody who's here, a system, and this is just about the area that I gave him the system. And of course, you know, as soon as I gave it to him, it went nothing into a straight drawdown and started losing money. And I was like, oh, geez, I'm sorry. But point is, what I did tell him, and what I do is, if in the case of a one-lot, if you're a one-lot trader, then it doesn't really matter too much. But I will take off half of my size if the equity curve breaks the 10-period moving average, and if it breaks the 20-period moving average, I will stop trading that system until it goes back above it, okay? Because, quite frankly, there is a risk in mechanical systems. The fact is, if you haven't picked it up by now, I don't know that this equity curve or that this drawdown is going to come back down into here somewhere. I don't know if it's going to be a 2-point drawdown, a 150-point drawdown. I don't know. So this is a real clean and easy way to know when to stop trading this system and or when to start trading this system. So if this draws down into here somewhere, guess what? I'm not hurt because I stopped trading it way up in here. And you know, if it takes the rest of this time and or never goes profitable again, guess what? I've taken, relatively speaking, a very minuscule drawdown, which is, you know, nothing more than you would expect on any type of subjective system or anything else. So, you know, you can eliminate trading that system at that point. And again, as you can see, you know, you were in for some real nice runs. And if you followed the 20 and if you stayed in, you really were only out right through here a few trades, right through here a few trades, and realistically you were in pretty much the entire time on this system.
Let me ask you, if you're waiting for it to get above the 20 again or above the 10? Because
Either.
Oh.
Either.
Because it looks like you didn't get above it until you had that spike.
Up here.
So we'll go back to the first time.
Back in here?
Right there. Oh, no. Yeah.
Right here.
No, you still, is that when you're?
Yeah, that trade closed above right there. Actually, quite frankly, this trade closed above right here. And for those of you who might not understand what's going on here, each one of these histograms is a trade. So you can see each and every trade as you made money or lost money and be able to count. Here's 1 loser, 2 losers, 3 losers, 4 losers, okay? You had 1 winner and then you had several more losers in a row here. So you actually broke above it right here. But you broke above the 10 on this one, and I would go ahead and probably have taken this loser right here, but you're still above the 10, and I'd still be in right here with a half a position here, and at this stage in the game, I'd go ahead and for this trade, for this losing trade here, I would have been back in with my full-size position. But then, you know, you had the nice run up. So that's the way I do that. And again, I mean, you know, so you were out here, you got in half position here, you got back to your full position right here, and you know, you went from little less than 170, we'll call it 165 or so, up to about 208 or so. So, you know, 40, 50 points, that's not too bad. You know, without even being concerned with whether you're going to be trading it or not. And again, you know, suppose I had just started trading it here and I've just made 50 points, you know, we barely dipped below it there. I don't know, you know, it's a little subjective. I don't know that I'd be that quick if I've just got done on a 50-point run, knowing that, geez, I just lost a tiny little bit in the moving average. It's been moving up so quickly, the moving average is up there. Am I going to be that quick on that scenario? I don't know. As opposed to back in here where, you know, you had several nice big runs, and then you had a loser, another big winner, loser, 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 winner, loser. You know, now back in here, we already went through some chop with some trades, and so something in the market wasn't reacting well. So, you know, I've already got a precursor to know that, you know, in the last week or two or whatever it has been for these trades, it's been a little rough. So, you know, in this case, I probably would have been saying, okay, yeah, I'm going to cut back half position here. And same with even in here. You know, you had a nice little run up, but then you started getting choppy. I mean, this is a loser, this is a loser, this is a small winner, even smaller winner, loser. So, you know. But the other thing here, so that's an idea for you. That's what I do. The other thing is the MFE and MAE. Maximum favorable excursion, maximum adverse excursion, exactly the same. The only difference is favorable is the trades that went for you, favorably for you before they closed, and the max adverse is how far it went against you before it closed. The green circles are trades that, in this case, in this one, on this trade right here, look across the bottom scale, this trade went up to almost 9, close to 10 points profit, okay, before it ended up with a net profit of, what, 1.5 points? So, you know, you gave back quite a bit on that trade. Still a winning trade, but you gave up 8, 9 points on that thing. This one, this is an ugly one. You were up about 8.5 points, you can see right here, okay? But you ended up losing, you know, wasn't much, probably 50 cents or less, but nevertheless, you were up 8.5 points and gave up about 9 to end up with a 50-cent loser. But the fact is, it's a mechanical system, and that's the way it works.
We didn't have that trailing stop clause checked.
That's right. That's right. So, and you know, these trades are the ugly ones. This is where the stop is on this thing. It's a 4.9 stop, as if I recall correctly. Call it a 5-point stop. But, you know, these all took max loss. This one's the worst of the bunch. You were up just a little over 5 points, okay, before you stopped out for a max loss of 4.9. So that's the way you read these things. And the blue line is related to the right scale over here. And if I go back, let's go back over here. If I go back here and say none, all right. Now, when you're initially using this thing, this has no stop set. This has no profit protects in there. I'm going to look at MAE first, actually. I'm more concerned with my adverse excursions than I am my profitable favorable excursions. You know, when you're looking at this thing, as you watch this blue line, you look with the crosshairs over here to where your scale is, and that's your total number of points if you put a stop here at this point here. So, you know, of course you want to get up near your highest point, but you've also got to be careful, because when you live on a mountaintop, I guess this is an appropriate place to talk about mountaintops. When you're standing there teetering on the very top of that mountain, wind gust comes up on the cross-continental divide and blows you down the other side real quick, okay? So what you need to be concerned with is if you press and hold down the left mouse button, this will give you a mathematical where you can see on the bottom 3 numbers there, it says stop at, what's it say, 4.86. Well, do you guys put in stops for 4.86 on the Russell? I don't think you can do that. So what you've got to keep in mind is it's a mathematical thing. So you've got to try to determine where, because let's say I tried to put it right here, okay? Well, you know, look at the very bottom line up there. It says total using stop 245.60, and if I just move it over here, total using stop 298, there was a 290, it was 298.96, okay? But from here to here, you got about a 50-point difference. That's pretty significant. So, you know, in this case, you're making a lower stop, so it's not so bad. But the cases you got to watch is where it's fallen off to the other side. But even in this case, you know, you can continue to move your stop up. So you got to basically round off, but you got to be aware that it's mathematically calculated and not necessarily calculated as per exact tick value. Does that make sense? Well, a tick on Russell is 10 cents, right?
Oh.
So if this is telling you 8 cents,
right,
you can't put in a stop for 8 cents. It's got to be 10 cents, right? So it's a mathematical value, and you can't do that. So you've got to come to the closest real value without, you know, coming down the cliff side here. So just be aware of that. But and you can see as you move the stop across here. Now, a lot of times what you'll see, this is actually not too bad in here, but a lot of times you'll see maybe a peak in here, and then it'll come way down here, and then you'll have this peak because you had this one trade way out here someplace that was a real big winner, right? This, one outlying trade that was one real big winner, and so you suddenly get this other peak that's at your highest point way out here, but you end up having to put your stop in at 20 points or 25 points or something. You got to think about what you're doing here. I'd much rather take just a little bit less profit and not worry about catching this one outlying trade. And the other thing is if you have one outlying trade, I wish I knew which system it was on, because I had one system that I talked about in Orlando that had it was a trend following system, and it was really meant to go for smaller targets, but without any stop or profit protects, it had it was something ridiculous, like a 72-point winner. So, I wish I could get 72-point winners every day, but that just doesn't happen. So something like that, you want to just try to at least mentally subtract that from your results. And as it turned out, with that 72-point winner, the system, if you just looked at the statistics and the numbers, you'd have said, hey, this looks pretty good. But then suddenly, if you'd have been wise enough to take that one outlying trade out, the 72-point winner, taking 72 points off your total profit, suddenly realized, oh, gee, this doesn't look so good after all. So, you've got to be aware of those outliers as well. Same, you've actually kind of got one to some degree right here. You were up 18 points. Looks like 17 and a half anyway, and you ended up with what's that say, 18-point loss. Now, I don't know what the deal is there. I find that one hard to believe. That had to be an opening gap or something, since my stop is at 5. Oh no, I don't have any stops in here right now. That's right. So anyway, I would come here, and I'm just going to go ahead and go for the gusto here. And, well, as it turns out, I think I used didn't I use a 49 tick stop? So basically I'm right in here, 488, 490. So I'm basically right there is where I had my stop, is at 490. So then I'm going to come over here to max favorable, basically do the same kind of thing. Now in this one we can see, here's an example right here to some degree. You can get ever so slightly amount more profit here than here, but is it really worth it? Because I can guarantee you what this is saying is, instead of me taking my profits and putting my stop in here, I'm going to make it go that extra little bit so I can get that extra few pennies of profit. To me, it's not worth it. I'm going to probably look back in here, but let's just see where that is. 22 points. Okay, so how often are you going to get a 22-point profit? That's the next question. You see all those trades left and right of the green pointer? So all the trades to the right of the green pointer are trades that you in fact would have received more than 22 points. All the trades to the left of the crosshair are trades that didn't go as far as 22 points. So what that tells me is I have the further to the right that I move this crosshair, the lower the probability of hitting that target that I have. Right? Yeah? Makes sense? And the further to the left I move this thing, the higher the probability that I'm going to get hit on that target. So instead of looking for any 22-point profit, let's see what this one is. Isn't that amazing? 10 points. So you can see I had, what, 990, I think? So basically, I put my stop in right in this area somewhere at 990. Okay? And when you put these stops in, I'll get back to the bid-ask thing. Now, but hang on, while I'm still on the point. Okay, so now 100% of these trades over here hit that target. 100% of them. Because they all, without any protection, profit protection, all exceeded it. So 100% of these trades hit the target. None of these did. Okay? But as you can see, with the blue line and where my crosshair is over there, I'm looking at about a 290 point total profit using that point. versus if I went all the way up here, you know, to 331. So I would have ended up with 40 more points to use a 22-point target than using call it a 10-point target to have 40 less points, and a lot more trades hit it. So I don't know about you, but I'd much rather have a higher percentage hit rate, a more realistic target, and you know, I'll accept the fact that I'm going to lose out on 40 extra points profit. Okay. Does everybody understand this? Yes? No? Maybe? You're all sleeping? Nod of a head would be good? Okay. I'm going to assume that's a yes. So let's go back then. And then you've got to understand now, when you go back, and then you put in your stop and your profit, the one thing you've got to understand, I mentioned it yesterday, you've got to bid and ask. This is operating off of last. All right, in hindsight, you know what the last price was. In real time, you don't. You've got a bid-ask spread. So what you can do is vary this, and what I will typically do is, you know, I'll vary it by, you know, each way, several ticks, 5, 10 ticks each way, just to see if, and which is the other thing, and I talked about being on top of that mountain again. You know, you want a wide range where, you know, it doesn't really matter if you varied your ticks down or varied them up by just, you know, a few ticks one way or the other. The wider the range, the better, because, you know, you're not living on this very peaky equity top that, you know, just one tick one way or the other, suddenly, you know, you get a lot less profit. So you'd like to have a band where you can actually achieve that same profit. And that blue line pretty much points it out to you. But we'll throw that back in and take a look at these. And so now you can see, since I've got my profit here at whatever it is, 9 points, now you can see anything over here that's above this, this obviously was an opening gap, because it's well beyond, it's 12 points. My target is right here at 990. This one's at 12 points. So actually it ended up, yeah, it's a 12-point winner as well. So that actually was an opening gap, because this system is held overnight, and one day, I don't know if that was a long or short trade, but it doesn't matter. It gapped one way or the other, and gapped all the way past my target and filled me at a 12-point profit as opposed to a 990 profit. I'm not upset with that, believe me. But
twice out of that whole system did you actually hit target, right?
no. No. This is the favorable excursion before it closes. Now, what you're going to see here, let me show you this. Here is the trades that you hit full profit on. Okay? These trades went against you at some level. This is the worst one. It appears out here. This one actually was against you between 470, well, it was probably 480, I would guess. It went $4.80 against me, and I had what, a 490? So yeah, so basically it came within one tick of stopping me out. It turned around and went to full profit at 990. Okay? So all of those trades across that line are the trades that hit full trades. Okay? And just look at those numbers. You'll see right now they're at 86 and 81. So I got 86 winning trades, 81 losing trades, okay? And the other thing is, up in the upper left-hand corner, you'll see the date range that this system is covering right now. So it goes from April 30th, 2003 to current, all right? And that's your total profit, 288 points. Here's your profit factor of 192. And remember when I was telling you yesterday, if this is kind of one of your first key number here, if these two are equal, your net and your gross loss and your net profit, if these two are equal, this number will be 2. 192 is pretty darn good. You know, a little better than 50%, which isn't great, but that's okay because I'm going for a 10-point target on this thing. You know, how many times do you get a 10-point target? So anyway, I'm going to change the stop real quick. But remember, 86 winners, 81 losers. And I'm just going to vary it by 1 tick. Okay. I'll say, oops, 98. Okay, made no difference at all. And that's the kind of thing I want to see. Where I would really see a difference in this is on shorter term systems where I got lower targets. You know, if I'm going for, you know, just a couple of points or something like that, you'll see those numbers change. Since this is a bigger target, let's go down to 90. $86, $81. Okay, so no matter what I do, it still stays the same. But you know, notice your profit's now coming down from 290, whatever it was, to 279. So in any case, that's kind of what you do. Now, the other thing I didn't mention, and again, it's written up fairly well in the book, I think, in my section, is basically all I did yesterday and all I've shown you up to now is I'm ultimately curve fitting this set of data. Okay, there is no question about it. And the other thing I should have done is change this from what are we doing here? Typically, I would have started this whole process with 5,000 bars, okay? So I would ultimately have curve fit that 5,000 bars. I don't deny it. It's absolutely true because you pretty much saw what I did, and I would vary the indicator values and so on and so forth, get it to the point where I've got a good-looking equity curve, okay? And, you know, I'd come back here, and I'd see these results. I'd take a look at this equity curve, and I'd say, okay, that's pretty good looking. Now, what I'd then do is go from 5,000 to 10,000. I want to see consistency. I don't want to see big dips in that equity curve. I don't want to see the profitability, you know, it was 51%. I don't want to see that going down to 45% to 40%. I don't want to see the winners now overtaking losers. I want to see true consistency top to bottom. I'll go back another 5,000 bars. Same thing. Another 5,000, work my way up to 30,000 bars, and if in the extra 25,000 bars it shows me the same type of results, then I'm happy with it. Because believe me, you can curve fit like this on a 5,000 bar sample period, and you start throwing in another 5,000 bars, and suddenly everything just goes not good. Okay, so you know it's highly possible. Anyway, you asked, the money management thing I was going to talk about was no real big deal. Is there any questions on this?
Is there a place to optimize automatically?
No. No. There is no, yeah, you sit here and you go back and forth and you change the values. You're the optimizer. Any other questions on this? No. Okay. The money management really is nothing more than a lot of people have, especially beginning traders, you have no real mechanism or no idea how to start increasing your number of contracts. Suppose, let's just keep it simple, you start at one contract. You know, you have 3 or 4 winners in a row, you're king of the hill, you suddenly start increasing to 2, 3, 4 contracts. Like, it's just not the way to do things. You know, stay with one contract, stay with one contract, stay with one contract, and a really good number, just for instance, on say the S&P, where you got basically a $4,000 margin to carry overnight. Once you achieve a $4,000 profit trading whatever system it is or whatever method you're using to trade, doesn't really matter, you get a $4,000 profit. You then advance to 2 contracts. You get another $4,000 profit, so now you're up to $8,000 in profit. You go to 3 contracts. You go, and the reason I picked 4,000 is, one, even if you're not holding overnight, if you should ever get into the position where you do hold overnight, you'll always have enough margin to cover your overnight holdings, okay, for one. For two, you don't want to use too small a number, because the smaller the number you use, say you use 2,000, okay, or 1,000. The problem is that you start advancing contracts so fast that you can't even cover the day margin rates eventually, because you're advancing contracts so fast. It's too aggressive. On the other hand, if you move to 6,000 or 8,000, the problem on one contract is it takes you forever to make an $8,000 profit trade in one contract, so it takes too long. So what this really is, and I don't know if any of you are familiar with Ryan Jones, because it basically is a modified Ryan Jones method that I use. But basically, so as you start to make these $4,000 profits, you just increase contract, 2 contracts, 3 contracts, so on and so forth. Now, caveat here is ultimately, even at $4,000, there's going to be a point in time, say for instance you get up to 20 contracts. Well, guess what? Making $4,000 on a 20 lot trade isn't that big of a deal anymore. So actually, what I do after every 5 contracts, I'll increase from, say from 4,000 to 5,000. Okay, and so then as you go up in 5s, you also increase the amount of money, and there's a point in time where you also may want to increase that by more than 1,000, but that's a great starting point. And if you start losing money now, let's say you got up to 12,000, you just started trading 4 contracts, right? Because you were at 2 at 4,000, you were at 3 at 8,000, you're now at 4 at 12,000. You lose $4,000, you start coming back down, you're in some sort of a drawdown, you come back down a contract. You go under 8,000, you come back down another contract. So it gives you a logical way to increase and or decrease contracts as you're doing well or not doing so well. And you would be amazed at, because I know a lot of people, I'm not going to mention names. I know a lot of people that, they're very successful traders, but they don't understand how much more successful they would be if they started increasing their size on a routine schedule like this. The numbers are just mind-boggling, truly mind-boggling. I don't have that spreadsheet on this laptop. I wish I did right now. But it's truly mind-boggling to see the benefits of continuing to increase your contracts as your profits increase. It's amazing. So, that's about all there is to it. It's fairly simple, fairly quick. There doesn't take any real brain surgery, but 4,000 is a pretty good number to start with as far as increasing. And the other thing is, it's kind of funny, kind of sad, kind of ironic, but if you think about it, when you increase from 1 contract to 2, that is the biggest increase of risk you will ever have. Why? You've just doubled your risk. You've increased your risk by 100% to go from 1 contract to 2. But the nice thing is to go from 2 to 3, you've only increased your risk by 50%. To go from 3 to 4, you've only increased by 33%. To go from 4 to 5, you've only increased by 20%. To go from 10 to 11, you're only increasing your risk by 10%. So the more contracts you trade, once you get to the 10 contract area, it doesn't matter. You're only very small by a very small increment increasing the amount of risk by adding another contract, but yet for those dollars in your pocket, it makes a lot of difference. So that's something to think about as well. So what ends up happening if you looked at this on a spreadsheet and actually calculated something out, we'll just for instance say it took you 100 days, 150 days on 1 contract to get to a $4,000 profit. Okay, it's pretty achievable. Not a lot of profit. Take 150 days to do that. So at that stage in the game, you add 2 contracts. Well, guess what? Now your time period is shortened. Not quite by half, but pretty close. You add 3 contracts, your time period gets shortened. You get up to 10, 11 contracts, suddenly every few weeks, literally, or less, depending on what your target number is, you start, you're increasing contracts. So it's a It's a proven method. It's a fairly simple method, and trust me when I tell you, it's a phenomenal way to grow your account. So, something you might want to take a look at. Something you might want to think about. Go ahead.
What is the starting account, the one that you mentioned yesterday, $20,000? Because once you start to increase, what is the start?
I'm not taking I'm not talking about capital in your account. I'm talking about making profits on whatever your account size would be. So if you had a $5,000 account, which based on what I told you yesterday, I certainly don't recommend such a thing, but if you did, once you had your $4,000 profit, you'd go ahead and increase to 2 contracts. If you had a $100,000 account, once you got your $4,000, you increase to another contract. So I don't really care about what the beginning account size is. It doesn't really matter because it doesn't have anything to do with increasing or decreasing, other than the fact that the more money you have in there, the greater buffer you have should something go wrong. Okay, you know, should you have a bad trade. So, but again, as far as the increment up or increment down, and as far as the size wise, like I said, the SEC is pretty much determined. You need 25,000 to be a day trader. So realistically, you need more like 30,000. You know, so I consider that to be a pretty small account. You know, probably 50, 60,000 is a medium account. 100,000, you're in good shape. Anything over that, you're just, you know, king of the hill. So, you know, it's you got to kind of trade by what you have, and most average accounts are small accounts. If the average brokerage account is $5,000, you know, they qualify as a small account. So, you know, does that help? So it doesn't really matter what the starting account size is.
Well, how to put the sound?
Oh, easy. So there's 2 ways you can do this. You can make a sound file for anything in the program, and you would do that. I'm just going to show you right now where you'd put it in first, okay? So you would go to Utilities, Global Settings, and where is it? Sound Alarms, okay? Oh, did he show that too? Or change that too? Oh, he changed that too. Oh, he's sneaky. Wait, is it so? Oh, okay. So you'd say play wave file here, and then you could put your file name in here, and you know, you could just do this, and then you would search through wherever you had your sound file located, okay? And then you could say test. But if you wanted to do it on an individual chart, oh, I got to just say speaker. If I wanted to put it on an individual chart, I go to the chart options dialog box and say sound, same thing. I put the file name in here. Now basically all you've got to do, you're first of all going to have to get a microphone, okay? And let's see, one of these is real. Okay, so you come over here to your, probably under Programs and Accessories, and you just go to your Microsoft Sound Recorder, okay? And you say, I'm tired of talking, that's it. Okay, and let's see, we want to say File, Save As, and I'll save it as Denver, so I'll know what to erase. And I guess I'll just save that in My Music. Okay, I'll save that there. And then all I've got to do is come here, go back to, and I'm going to put this just on this chart only, okay? So each individual chart, you come here, you look for My Music. Wait a minute, Documents, My Music, Denver, open, and then you can test it. And if you were up here, you would have heard it, but you didn't hear it. Okay, that's a good idea. I'm tired of talking. That's it. Okay. So you just that's how you put it on an individual chart. So you've got the opportunity to either do it on an individual chart, or now the question is, how do you delete this from here?
Let me ask you this, how do you take that sound file to activate on a certain thing that you want it to activate on?
Do what now? What do you want to do?
For instance, like, let's say Yuri said that if it broke the bar by 2 ticks,
Yeah.
how do I get it to set an alarm like that?
I don't know if it'll do it on a regular alarm. I don't believe it will. Also, if you right-click on the open thing, I don't know if I mentioned this or not, you right-click and you get this menu of all kind of things. We're going to say new, and we're going to just put one in here. Of course, we can't do it because we're not moving, so we can't really trigger it. I don't know if it'll do it on just an alarm. I think it actually will. But basically, you would set an alarm. Will it? Will the sound file go on a regular alarm? If you have a sound file, a wave file associated with this chart, and you set an alarm, okay, so there's your answer. It will work. So basically, you just record it just like I did, and then I don't know, let's go ahead and try, see if I can just move it, and maybe, I can't do it. It'll have to be real data. Okay. Well, and the other way is, that's basically the way I did it, is I would have it in my system. So whenever my system gave me a signal, then it'll come up and say, and basically, if you have, well, this doesn't really matter for the most part. Email, where is it? Sound alarms. Here's 2 different ways to display the dialog boxes, and it doesn't really matter. And again, if you wanted to do it globally for any chart and all charts, you would just do it here as opposed to on the individual chart. Okay, but yeah, these 2. This doesn't matter, I guess.
I guess my question more was, how do I go about setting the alarm to go off after 2 ticks of breaking the...
Right here. You right-click. Say chart alarm, new, come over here and click. This little red line is here.
He means on an indicator, so that when
when the bar
crosses the dynamic trio line.
That's correct.
There's an alarm, alarm right in the indicator window that comes up.
Here. You want to use a dynamic trio. So, use a dynamic trio.
There's a video on that too.
Oops, I don't want 2 of them. Okay, here's a dynamic trio. So you come in and you edit the dynamic trio, alarm, results. So this will alarm on condition, only last bar. This will show trades on the chart. This will paint the lines, but these have nothing to do with the alarm itself. The only one you need for the alarm is right here. Okay?
And then, but how do you tell it that you want it to go off when it goes through by 2 ticks?
Well, the indicator is set up by default to use 2 ticks. Okay? So when it says by number of ticks, 2, so if you wanted to change that to some other value, you'd put another value, but the default value is 2 ticks. So when this closes above or below the indicator by 2 ticks, it's going to alarm that is what has happened.
Is there a place to tell what wave file you want to play for that alarm?
What I just got done showing you.
You went to General tab to do that,
No.
right?
You go right here to chart options for this chart, and you put a sound right there.
So all alarms on this chart will say the same thing?
Yes. You're not going to have multiple sounds saying, go long, go short. crossover, da da da. Yes, that's true. You will have, you know.
Red box.
That the way that it would be if there was a drop, you know, it would have to be, they would have to program it to have this window in each indicator. Then you know.
Good luck. You know, I tell you, I've used it for a long time, and I mean, really, if you think about it, if you're a full-time trader, what's your job? It's trading. It's being in front of the screen. The reason you have an audible alarm is to alert you, and in my case, I have it more for anything than, you know, if I'm off in the kitchen getting some breakfast or getting something to drink or eat or whatever, and something happens, and I suddenly hear myself talking to myself, it's like, hey, drop the milk, I gotta go. Okay, so does it really matter what it says? You know, does it matter that it says go long? Does it matter that it says exit your trade? I mean, you gotta do something, so get moving. So, you know, I tend to slightly agree with you, but on the other hand, after I started using it, it was like, you know what, it really doesn't matter, because the fact is, I need to be here. There is something I need to do, so does it matter what it says? So, okay. I think I've worn most of the crowd out. Most of the crowd's gone. You're welcome. Is that it? Okay, thank you.